watching India Market Open. It's midweek and it's a quiet day across world equity markets. Not too much in terms of difference expected on D Street either. Of course, this week largely has been about the Fed-led rally, and that's pretty much what traders will be eyeing this morning too. Good morning, Niraj.
Good morning, Samina. Well, I guess looking at the Asian screen, maybe not as much of a rally in store today, but it's certainly something that you want to keep an eye out for because the cues, by and large, seem to be not so bad. It's interesting. I think the one bogey, if you will, and we'll come to that in a moment from now, once the global cues are out, is the RBI governor's statements yesterday to us, wherein he said that no amount of this correction right now that we've seen thus far might really help the RBI to move rates per se. I think that was the sum and substance of one of the key messages that came in from the Reserve Bank of India in the session yesterday. So that's one thing. Food and vegetable price cut, not enough to cut rates. Is that something that makes the October policy that a few people believe could be active a lot less active? Remains to be seen.
And fair, right? Because controlling inflation or managing inflation is indirectly controlling the purchasing power of people. So I think he simplifies that, and I think that's the key takeaway, because most people, after you read the policy, are circumspect and confused of where or what the direction of it could be in terms of policy. But of course, we'll bring you the full interview of the RBI governor shortly, where he explains to the common man of what he's eyeing and what is, of course, that inflation number mean for the larger policies. And of course, what it also means for banks and deposits indirectly. But a quick check on how and the way the world is trading this morning. A look at implied Nifty. It should be a quiet start. Don't expect fireworks in early minutes of trade. Remember, 16 points low, so largely in line with what we're expecting. We closed just about at that 24,000, shy of 24,700 in yesterday's close. This morning, you're expecting a very flat start, keeping in line with the rest of the world. Well, Asian markets are also trading flat, so no fireworks for Asian equity markets. Shanghai and Hong Kong are down 1%. Japan, that wasn't doing too badly, has also moved into negative territory. There's been economic data that's come out of Japan, and remember, this is their trade deficit number. This is the last for the month of July, where exports have risen 10.3% versus an expectation of 11.4%, and imports have risen 16.6%. The reason this is important is because the street was expecting a better figure. This was the last trade deficit reading that has come in before the Bank of Japan hiked rates. Japanese exports have been very competitive, and that's why you're seeing the kind of export number you are. But markets had anticipated, or traders had anticipated, that export number would look much better than what it came in just a few minutes ago. So markets reacting negatively to that news. Well, apart from that, you've also got flattish trades. The few sectors that are probably moving across Asia, also probably oil and gas related names on back of lower crude. Let's quickly take you through what's happening in terms of what rather happened in terms of Wall Street trade. It was U.S. markets taking a break after 8 straight days of gains. The Nasdaq, the Dow, and the S&P 500 all went home flat. There were also no major triggers or cues for the markets to move in either directions yesterday, and hence you saw a fairly lukewarm day of trade. Volumes are also light. Volatility index has also eased off quite well for Wall Street. So all those cues together have meant a flat but stable day of trade on Wall Street. Well, I know at the cost of sounding repetitive, the two cues that markets are still watching out for is the Fed policy minutes that are expected later today from Wall Street. So you will have Asia and Indian markets react to that only tomorrow. And of course, it's a Jackson Hole symposium on Friday. So like I said, at the cost of sounding repetitive, those are the two big cues that global participants are currently tracking. Along with that, the general street expectation again remains that the Fed chief will lean dovish, and that is going to be what could drive markets or provide the much expected room for a rally for global equity markets. Apart from that, a quick mention on what happened on crude and gold, because those are also market moving. Crude is on its way down. It's continued to decline, trades at a 2-week low. The U.S. crude oil futures trade at $74 per barrel. There are demand worries in China. Of course, that's the big factor that's keeping the tap on crude prices. And for some reason, crude traders believe that a ceasefire is very likely in, of course, Gaza. China, remember, produced 6% less fuel in July as compared to last year, indicating that the demand in China for crude and, of course, its ancillary is much lower, and profit operating margins are also much lower. Those are the factors that are keeping crude under pressure. Crude is down nearly 10% this quarter. Some analysts argue that crude traders may be underestimating geopolitical stress. But of course, in gold, they seem to be overestimating geopolitical stress. Gold seems to be in a breakout. It did rally beyond $2,500 yesterday in overnight trade. In gold, of course, it is a geopolitical risk, the uncertainty around the U.S. presidential elections, expectations of a rate cut from the Federal Reserve, a weaker dollar, and weaker treasury, which are both safe havens that are supporting gold prices. If some of the reports are to be believed, I think 2,700 could be seen after September 18th when the Fed cuts rates, and even 3,000 are some of the levels doing the rounds as early as mid next year. So,
so the beauty around this gold rally is that, so I started my career as a gold and dollar trader, right?
Course,
so if you see the prior major bull markets, 71 to 80 or 2001 to 2011, gold rallied when a host of other things, dollar weakened substantially during that point. Gold was not on the leaderboard. There were other commodities also going along with. This time around, dollar is not weakened as much, right?
Anticipation of weakness on back of a rate cut.
But the point being, the rally has not been just in the last 1 month. There has been an incessant rally for such a long time. And it's not that the other commodities are participating. So it's a very different rally this time around in gold.
It's truly safe haven. And even, like I said this yesterday as well, analysts believe that for crude, there is underestimating geopolitical stress. One of the triggers for gold usually is a safe haven value it holds, and they seem to be overestimating the global stress. But also worth mentioning is just to make this relative, gold is up 20% in the year 2024. The Nifty is up 13.5%. The 10-year compounded returns on gold are marginally better than the Nifty in the last decade.
But better. So in some sense, gold has done really well. So if you want a portfolio allocation and thinking this is a dud asset, it is not.
It never has been.
Yeah, but just one
Indian housewives, I tell you, Niraj.
Most certainly. But the other factor, just one last point here before we go to the trade setup, the other factor which is different this time around seems to be that Chinese and Japanese savers have taken to gold like fish to water.
Because of the uncertainty.
The Chinese savings into real estate and other assets has moved away. It's going into gold.
And the Japanese yen probably could be a reason why gold seems like a more stable asset class. But for whatever it's worth, it seems like this party for gold is not ending anytime soon. Niraj will, of course, take us through the trade setup. But I'll once again mention Friday you had a buy figure from foreign investors. Monday, Tuesday, both days, FIs have continued to sell Indian equities. They've sold to the tune of 1,458 crores, and DIs continue to buy to the tune of 2,252 crores. This number is important, and we will get more perspective from EPFR in just a few minutes, because Indian equities are seeing selling, but Indian debt has been seeing buying over the last couple of months. But Niraj, yesterday, we both started the day saying, quiet day, don't expect too much. And it looked right. But of course, midday, we hit levels of 24,700. Didn't close about that. But it turned out to be quite exciting. And Bank Nifty pulled its weight.
Yeah, for a change, Bank Nifty participating. And the broader markets participated too. So it was a broad-based rally for sure, but possibly quieter in today's session on account of global news. The FI long-short ratio also improving, which is a good thing. I wonder what is about fund flows, and I think that's the broader conversation that we will do, of course. But just keep in mind a couple of other factors. One, local pockets like OMCs, where the tailwinds very likely to continue, so you want to keep an eye out for those. And local dealers talk of an extended wedding season ahead, and we'll talk about this in detail later on. But this is the other thing you watch out for, and want to watch out for what happens to banks and financials going ahead, because the RBI governor, in his big interview to the NDTV network yesterday, has said, amongst other things, and you'll hear everything else, but amongst other things, the RBI governor has said that fall in food and vegetable prices in July is not enough to cut rates. I think this was, amongst other things, this was one thing that stood out for me. So certainly keep an eye out for. You'll hear an excerpt of that conversation a bit later on the show.
Indeed, and I think that is the big story, especially on a day when there aren't too many other cues that the markets are providing us. But talking about fund flows, because this is significant for equities, for debt, and of course the large India piece, we have Cameron Brandt, Director of Research of EPFR, joining in. Cameron, good morning. Thank you very much for taking the time out to talk to us. Let's start with where money is going. Is it going into US equities? Is it going into emerging markets? Where is the tide flowing?
Fund flows, both equity and debt, are very US centric over the past 2 weeks. Those and some money into the diversified global equity funds. There's still some money coming in to dedicated China and India funds, but that's increasingly local. And in the case of India, we're seeing the redemptions from diversified global emerging markets funds begin to reach levels where their selling of Indian equity is getting close to canceling out the inflows to the dedicated funds.
Cameron, good morning from here. Where is it that you reckon that flows, not just over the last 1 month, because we know that the last 15 days, I think China dedicated funds also pulled off some money. Just trying to understand within that EM landscape, where is it that which are the markets which are seeing the max outflows? And I know you don't get into a predictive mode per se because you speak about data, but I'm just trying to understand what's your guess about what happens post the Fed cut?
I think post the Fed cut, some people who have stayed out, as they often do during the summer, will come back and start taking a closer look. At the moment, the segment of the emerging markets universe that is struggling the most is Latin America, a fairly toxic combination for them of doubts about Chinese growth, high US interest rates, unfortunate uptick in inflation, and pressure on the ESG theme, which certainly last year and in 2022 was actually pretty supportive of Latin America.
Right. Cameron, I know it's tough for you to call the outlook on fund flows, but before we go into debt as an asset class, I want to get an understanding from you whether you're seeing foreign money or just significant wealth flowing into gold. And what is that trend playing out like? Because gold is at record levels and it's at a very good run all through 2024.
As you say, gold has been very popular, but people seeking exposure have not largely gone looking for that exposure in the fund universe. We have started to see an uptick in flows into gold funds over the past couple of months, but and I've said this before, I've been somewhat surprised at how little gold funds have taken in, given sort of the uncertain balance between inflation and interest rates, certainly over the past 3 years.
Very lastly from me, would you be able to tell us how much flows are coming into debt, and is Indian debt preferred over other debt offerings from other countries in the emerging market pack?
So solid amounts are coming into debt funds, but again, it's very developed market centric. US bond funds have been by far the most popular destination for fixed income investors this year. Emerging markets funds have generally struggled. That said, we are starting to see a modest pickup in flows to dedicated India bond funds, and seeing India's weighting beginning to move up in the diversified funds, obviously a function of the recent inclusions in key indexes.
Okay, Cameron, at the start of the month, or at least in the month of August, right, on the equity side, I just want to move the conversation back to equities before we wrap up. India and China were getting a pass, and money was flowing into Japan. As you mentioned, not just on the debt side, on the equity side as well, on the EM side, I believe the India weightage is now the closest that it has been to China that it has ever been. So if the EM flows were to return with a bang post the rate cuts, could India, despite its valuations, see a larger flow from passive funds? I'm not asking you to predict what individual managers could do, but on the passive side, could the flows be larger?
Obviously, if there's sort of a broad re-rating of emerging markets thanks to lower U.S. interest rates, then India is going to benefit. Its average allocation among the GEM funds we track is at a record high. So I think no doubt that would be very supportive of India. At the moment, I think a couple of issues are weighing on the dedicated side. Indian equities were very popular with Japanese investors before the events at the beginning of the month. And there's a certain amount of concern about whether winding up of carry trades will sweep Indian assets up. And there's also still a certain amount of uncertainty about what the new tax regime for investors will mean, including mutual fund investors. So I think the answer to your question is if the brakes come off on diversified funds, it'll give you a nice bump. But the appetite for dedicated exposure, while it's still there, definitely seems to be at a lower ebb than it has been certainly in the first half of this year and all of last year.
Right. Thank you very much, Cameron. Great talking to you. We'll touch base again, hopefully early next month, to get some more perspective on where that flows are going or headed for. Well, in the meantime, the implied Nifty is indicating to a flat to slightly lower start, largely keeping in line with what the rest of the world markets are doing. Well, in terms of stocks, we've got a bunch of them to watch. Yesterday, remember, was a down day for Ola Electric, maybe on back of a little profit taking after the stock has nearly doubled since its listing. The big news that it may react positively to this morning is two of their products, which account for 50% of their revenue, have got a PLI scheme PLI approvals. Significant because this is one of the few two-wheelers, or rather the first one in the two-wheeler space that has actually got the PLI scheme approved. Important because it may draw out and give a sense of when the company actually turns profitable. If this is the news to go by, it's definitely going to be positive and could be the trigger that could bring in some more buying into Ola Electric after it took a breather yesterday. Apart from that, you've got a bunch of other stocks that I want to quickly highlight on. Cyient DLM, stake sale by the promoter, of course, the parent company is expected via a block deal, and it's a significant block deal that is expected. 14.5% stake is what the is looking at in terms of the sale. The deal size is expected to be to the tune of 860 crores. The floor price is set at 748, which is nearly at a 5% discount to yesterday's close price. Post this deal, the Cyient shareholding in Cyient DLM will decline from 66.6 to 52.16. So this could be one big mover in early minutes of trade. PNB Housing Finance, it's General Atlantic, which is looking to sell 5.1% equity stake in PNB Housing Finance. The floor price is set at 775 rupees a piece, which is at a 4.4% discount to yesterday's close. The size of this offer is about 1,033 crores. So again, you could see some downward pressure on the counter in the early minutes of trade when the deal goes through. You also have TRI data that's come through, but I'll highlight that in a minute. But Niraj, you want to come in with your stocks, and we'll go back to telecom post that.
Yeah, well, some sort of telecom as one of this, but nevertheless, Sansera Engineering is one interesting one. Approved fundraising of up to 1,200 crores via QIP or other means. Remember, this is a business which the management spoke to us about a month and a half ago, spoke about steady growth. Now, in order to fund that steady growth, I've reckoned this large QIP would be interesting to see the nature of the investors who are getting into Sansera via this QIP as they launch it. So that's one to watch out for. Recency recently Varun Beverages has been a bit quiet, and I think one of the reasons could well be that the HCCB IPO might be out soon. There is chatter of HCCB IPO coming soon. HCCB is the Hindustan Coca-Cola Beverage Company. Remember, it's the wholly owned bottling unit of Coca-Cola. Now, hitherto, Varun Beverages has enjoyed its great business, but also enjoyed a scarcity premium because just nobody in that business out there. Now that this is happening, could that premium get challenged? Even if Varun Beverages might have better metrics, I think that's a question to watch out for. So that's the second piece. Just watch out for Varun Beverages as the lead up to this IPO, as it when it happens. And I have a brokerage note. So maybe I'll highlight the brokerage note after, very quickly, Samina, the TRI data that you want to speak about.
Yeah, no, you can do the TRI. I'll highlight a few more companies that are there on our radar. Genesis Power, this was your big mover on Monday on back of a significant order win. Surprise if you thought that order win flow had stopped. There's another 3 orders that they've managed to bag in their subsidiary company to the tune of 3,609 crores. This now brings the order book, the total order book of the company closer to 28,000 crores. The stock is up nearly 90% in the last 1 year. Some more excitement and euphoria could be expected. Monday was a strong day. Tuesday wasn't bad. Today also could be a day of good gains coming in for Genesis Power. Well, I also have Tata companies that as a group will be in focus this morning on back of the upgrade coming in from S&P. Tata Motors has been raised to investment grade. Outlook has changed to stable from watch positive. JLR is raised to investment grade. Outlook changed to stable as well. And Tata Steel has been upgraded to BBB from BBB minus, and the outlook has been changed to stable. So if there is a reaction, you could expect some of these Tata Group companies to actually react well to that S&P upgrade coming in, as of course it will reduce the cost of funding, improve the dynamics of borrowing and liabilities generally for a company like Tata Groups.
Yeah, well, okay, so a quick one on the TRI data. Reliance and Bharti continue to add users. BSNL and Vodafone continue to lose users. Now, this has not impacted the stocks in the past, but it could be interesting if we see some bit of impact today. The most brokerages notes that I read seem to suggest that this is probably, for the next few months this may continue, but eventually as Vodafone's fundraise helps it ebb these losses, could be interesting to see what happens there. So that's one. And yesterday, Samina, the life insurance stocks had such a brilliant move, so thought it pertinent to highlight the HSBC note on life insurance. They say that they prefer HDFC Life and iPru on stock-specific catalysts. HDFC Life, they have a 16.7% upside, iPru about 13.2% upside, and SBI Life, which they say remains a steady compounder, about 10.7% upside. They are saying that healthy growth should support valuations if further VNB margin compression is limited to 100 basis points.
Well, yeah, and of course, worth mentioning this morning, but may not move the counter in any big way. The Bombay High Court member squashed and set aside the show cause notice issued by GST authorities to L&T. Remember, the GST had put out a service tax demand of 2,237 crores on the erstwhile subsidiary for a tax that they'd already paid with respect to certain transactions that were undertaken post the demerger. So this one could be reacting to at least the Bombay High Court's verdict. Well, telecoms will be in focus, and so will insurance, reacting to all those numbers that have trickled in. In terms of earnings, remember, you've got Procter & Gamble, so rather very, very slim, but you've got that one company amongst a few small ones that will be reporting earnings. The big story, though, remains the RBI governor's exclusive chat with NDTV. Of course, in a very candid conversation with Sanjay Pugalia, the governor talked about the outlook on GDP and the outlook on inflation. RBI's top boss says that a one-off 4% inflation reading will not drive policy decisions, urging patience instead and stress the need for sustained control. Let's listen into a slice of that exclusive conversation.
पहले तो ये है कि 4% के नीचे हम जाएंगे, वो हमने कभी नहीं कहा. आप अगर केयरफुली देखेंगे हमारा मॉनेटरी पॉलिसी स्टेटमेंट, हम ये कह रहे हैं कि ड्यूरेबल अलाइनमेंट ऑफ इन्फ्लेशन टू द टारगेट. अलाइनमेंट मतलब वो 4% के आसपास रहे, और उसमें एक ड्यूरेबल बेसिस में, ये नहीं कि वन ऑफ, मतलब आप देखिए पिछले जुलाई का इन्फ्लेशन 3.5% आ गया, इसका मतलब ये नहीं कि मतलब प्रॉब्लम ओवर हो गया है, क्योंकि दैट इज प्राइमरीली बिकॉज ऑफ बेस इफेक्ट, सॉलिड बेस इफेक्ट एडवांटेज था। तो आवर टारगेट, आवर अप्रोच जो है 4% के आसपास रहे और उसमें थोड़ा ड्यूरेबिलिटी, हमको कॉन्फिडेंस आए कि हाँ अभी 4% के आसपास रहेगा। एक वन ऑफ 4% के नीचे चला जाए फिर हम इंटरेस्ट रेट को ये कर देंगे, वो बहुत बड़ा सीरियस पॉलिसी मिस्टेक होगा। वी हैव टू बी पेशेंट, बहुत पेशेंट रहना, और भी थोड़ा डिस्टेंस अभी कवर करना है। और जहां तक ग्रोथ की सवाल है, ग्रोथ सैक्रिफाइस, अभी तक जो ग्रोथ सैक्रिफाइस है वो बहुत ही मतलब मिनिमल है, बिल्कुल ना होने की बराबर है। क्योंकि इस साल आप देखिए 7.2% हम प्रोजेक्ट कर रहे हैं और इंडिया विल रिमेन द फास्टेस्ट ग्रोइंग इकोनॉमी 24-25 में। तो इसीलिए ग्रोथ सैक्रिफाइस जो है, या तो उसको आप मिनिमल कह सकते हैं, लेकिन हमारे हिसाब से कोई मेजर, कोई ज्यादा मतलब ग्रोथ सैक्रिफाइस नहीं हुआ है। ग्रोथ रिमेन्स इंटैक्ट, ग्रोथ इज स्टेबल एंड रेसिलिएंट, और इन्फ्लेशन को हमको कम करना चाहिए। देखिए वेजिटेबल प्राइसेस या फूड आइटम्स को अगर आप निकाल देंगे और फिर आप कहेंगे कि नहीं इन्फ्लेशन कम हो गया, फिर आप एक आम जनता के पॉइंट ऑफ व्यू से आप सोचिए, अगर फूड प्राइसेस ज्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा जी, वो क्रेडिबल नहीं रहेगा। लोगों के, आम जनता के माइंड में ये रहेगा कैसे आप कह रहे हैं मेरा तो इतना खर्चा हो रहा है, मेरा सैलरी इतना है और उसमें से इतना परसेंटेज जा रहा है फूड कॉस्ट में, फूड इन्फ्लेशन, कैसे सरकार कह रही है, कैसे आरबीआई कह रही है कि इन्फ्लेशन जो है कम हो गया। इसीलिए फूड इन्फ्लेशन, हमारा जो हेडलाइन इन्फ्लेशन जो टारगेट है, उसमें एक बहुत बड़ा इंपॉर्टेंट कंपोनेंट है। उसका कारण ये है क्योंकि अभी जिस सर्वे के आधार पर हमारा कंज्यूमर जो कंजम्पशन बास्केट है, जिसके ऊपर टारगेट इन्फ्लेशन नंबर कैलकुलेट करते हैं, जो कंजम्पशन बास्केट है उसमें फूड इन्फ्लेशन का शेयर 46% है। तो मान लीजिए एक साधारण परिवार में 50% ऑफ कंजम्पशन, जितना खर्चा हो रहा है 50% खाने के चीज में फूड इन्फ्लेशन, फूड कॉस्ट में जाता है। तो इसीलिए ये बहुत ही जरूरी है कि हम फूड इन्फ्लेशन को मन में रखें, और रेट कब हम कम करेंगे या कब पॉलिसी चेंज करेंगे वो फ्यूचर डेटा के ऊपर डिपेंड करता है। लेकिन फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए। लेकिन इस साल का एवरेज हमने 4.5% लिया है, बहुत सारे अनसर्टेनिटीज है। आगे जाके हम देखेंगे कैसे इनकमिंग डेटा स्टडी करेंगे, उसके आधार पर आउटलुक क्या बन रहा है, हमारा असेसमेंट करेंगे कि अगले 6 महीने में कैसा रहेगा, उस बेसिस पे हम डिसीजन लेंगे। पहले से एक गाइडेंस दे के मतलब आप एक गाइडेंस दे देंगे, फिर वो आप देखते हैं कि कुछ डेवलपमेंट्स आगे और नहीं हो रहा है, तो हम लोगों को कंफ्यूज नहीं करना चाहते हैं। लेकिन वी आर कंप्लीटली फोकस्ड ऑन इन्फ्लेशन, वी आर कीपिंग क्लोज आई ऑन ग्रोथ, we are keeping close eye on inflation. We want inflation to, it is coming down, we want inflation to go and be around 4% and be there. फिर हम उसके ऊपर मतलब उसके बेसिस पे हम आगे का कदम डिसाइड करेंगे।
सर, चूंकि अब ये रियलिस्टिकली लोगों को भी लगने लगा है, देश में एक अच्छा कॉन्फिडेंस का माहौल है कि हम बड़ा टारगेट अचीव कर सकते हैं। चूंकि विकसित भारत का एक लक्ष्य है 2047 का, तो अगर उसको लूजली ट्रांसलेट करें इकोनॉमिक टर्म में कि एडवांस इकोनॉमी, एडवांस इकोनॉमी का मतलब ये है कि रिच कंट्री अगर कहना हो तो, रिच अगर न भी हो तो अपर मिडिल इनकम कंट्री तो हमको होना चाहिए। अब उसके लिए बैकवर्ड नंबर देखें, क्योंकि डेटा की जो विजिबिलिटी आपके पास है, हम में से किसी के पास नहीं है। उसको देखते हुए अगर मैं ये आपसे समझना चाहूं कि जो ग्रोथ की जरूरत है हमको उस टारगेट तक पहुंचने के लिए, कि मिडिल इनकम ट्रैप में फंस के न रह जाएं, उसके बाहर आ जाएं, उसमें क्या चैलेंजेस हैं ये समझना चाहूंगा।
पहले तो ये आरबीआई का जो भूमिका है इसमें, आरबीआई का भूमिका इसमें रहेगा मतलब ये चैलेंज, मतलब ये जो है इम्पोर्टेंट वर्क एजेंडा जिसको कि हम हमेशा ध्यान देना चाहिए। एक है वी हैव टू एंश्योर प्राइस स्टेबिलिटी, प्राइस स्टेबिलिटी मतलब चेक इन्फ्लेशन, कीप इट अराउंड 4%, क्योंकि प्राइस स्टेबिलिटी रहेगा तो इट गिव्स लॉट ऑफ कॉन्फिडेंस टू द कंज्यूमर्स। कंज्यूमर के हाथ में रियल परचेजिंग पावर जो है वो बढ़ जाता है, कंजम्पशन भी बढ़ेगा, क्योंकि जब इन्फ्लेशन बढ़ता है परचेजिंग पावर लोगों का कम हो जाता है। सो जब हम प्राइस स्टेबिलिटी मेंटेन करेंगे, लोगों में स्पेंडिंग के लिए, कंजम्पशन के लिए लोगों के हाथ में ज्यादा पैसा रहेगा। सेकेंडली, प्राइस स्टेबिलिटी मतलब इन्फ्लेशन आप मेंटेन करेंगे तो इन्वेस्टर कॉन्फिडेंस उसमें बहुत आता है। तो बिगेस्ट सपोर्ट ग्रोथ के लिए प्राइस स्टेबिलिटी से आता है। तो इसीलिए प्राइस स्टेबिलिटी एक इम्पॉर्टेंट कंपोनेंट है। आगे जाके भी हमको प्राइस स्टेबिलिटी मेंटेन करना चाहिए, और जो कि मॉनेटरी पॉलिसी का मेन ऑब्जेक्टिव है। सेकेंड थिंग इज फाइनेंशियल स्टेबिलिटी मेंटेन करना चाहिए। बैंकों का हेल्थ हो, एनबीएफसीज का हेल्थ हो, ओवरऑल फाइनेंशियल सेक्टर का हेल्थ हो, फाइनेंशियल सेक्टर में कोई एक्सेसिव लेवरेज ना हो। सो फाइनेंशियल सेक्टर स्टेबिलिटी बहुत जरूरी है। फिर उसके आगे जाके जो आपका मतलब जीडीपी ग्रोथ, और जीडीपी ग्रोथ के साथ साथ आपका जो जितने सारे इकोनॉमिक एक्टिविटीज उसमें कैसा मतलब हाउ इट विल गो फॉरवर्ड, उसमें opportunities are quite a lot. I think the government has come out with a number of measures, but I would just like to point out one or two things where one is, lot of reforms have taken place over the last few years. बहुत इंपॉर्टेंट रिफॉर्म्स आए हैं। इनफैक्ट मॉनिटरी पॉलिसी फ्रेमवर्क जो है वो सबसे बड़ा एक स्ट्रक्चरल रिफॉर्म है। इंसॉल्वेंसी बैंक्रप्सी कोड वो भी बड़ा स्ट्रक्चरल रिफॉर्म्स है। बाकी मेजर इनिशिएटिव्स जैसे कि मेक इन इंडिया, पीएलआई स्कीम्स, मैन्युफैक्चरिंग को सपोर्ट देने के लिए वो भी काफी कंट्रीब्यूशन किया है। सर्विस सेक्टर जो है काफी स्ट्रांग है। तो कई सारे रिफॉर्म्स हुए हैं। जो पेंडिंग रिफॉर्म्स है, चाहे वो सेंट्रल लेवल में हो या स्टेट लेवल में हो, इनफैक्ट स्टेट लेवल में बहुत सारे रिफॉर्म्स करना जरूरी है। तो जो पेंडिंग रिफॉर्म्स है, और मेनली वो रहेगा, आप मान लीजिए एग्रीकल्चरल मार्केटिंग सेक्टर, एग्रीकल्चरल सप्लाई चेन सेक्टर, उसमें मतलब सम रिफॉर्म्स आर रिक्वायर्ड। लेबर में भी कई सारे स्टेप्स आर रिक्वायर्ड, सम रिफॉर्म्स आर रिक्वायर्ड। Major items are also not just in central government domain, they are also in the state government domain. So therefore these reforms have to be continued. Innovation is today, innovation, startups, fintech is giving great opportunity. There I can say with a lot of satisfaction that I think India has really done well. We are creating a lot of jobs. And finally I think agriculture sector में भी output बढ़ाना चाहिए। We have made good progress in agriculture, लेकिन agricultural productivity and output उसमें भी काफी हम improvement ला सकते हैं। ग्लोबल मार्केट में हमारा सर्विसेज सेक्टर में जो इंडिया का एक्सपोर्ट है, it is now making its presence felt in the global in the external markets. Manufacturing, yes, we are exporting merchandise exports, लेकिन और भी अच्छा कर सकते हैं। उसके तरफ ध्यान दिया जा रहा है। ऐसे नहीं कि मेजर्स आर नॉट बीइंग टेकन, मेजर्स ले रहे हैं, बट आई एम जस्ट फ्लैगिंग कि दीज आर द इम्पोर्टेंट इश्यूज। थोड़ा डिसजॉइंटेड मैंने आपको बोल दिया, लेकिन इसीलिए मैं
क्लियर लिस्ट है,
मैं जस्ट रिकैपिचुलेट कर रहा हूँ। प्राइस स्टेबिलिटी, फाइनेंशियल स्टेबिलिटी, मैन्युफैक्चरिंग सेक्टर को कंटिन्यूड सपोर्ट, continued reforms both at the state and the central level, improving agricultural productivity, and finally increasing our share in the export market, and utilize the opportunity today which we have to become a significant part of the global value chain. उसमें हमारा इंडिया का जो शेयर है उसको बढ़ाने के लिए आज का जो स्थिति है, इट्स अ बिग अपॉर्चुनिटी फॉर इंडिया. इंडिया हैज मेड गुड प्रोग्रेस, बट आई थिंक वी कैन स्टिल इम्प्रूव एंड डू quite a lot in that area.
Well, significant, huge, and so much to take home, right? And also important because I think the RBI governor is trying to communicate to the common man, which is the most important. And I think a very good point, because we talked about this before the policy where food could be excluded from the inflation basket. But if 50% of your expenses are spent on food, you're going to have to wait it out to see a rate cut.
Yeah. No policy decisions based on one-offs. So that was one key thing as well. I thought the other very interesting thing, Samina, to my mind was Governor Das saying that banks should monitor the change in the investment strategies of young aspirational Indians, because as of now the shift from deposits to other investment avenues is not an issue, but it could be in the future. So a lot of emphasis on liquidity around banks as well.
Yeah, and he's been candid to say that while credit disbursement has increased due to digital banking, it continues to be deposits that is a challenge. But of course, he also, I think, praised banks for saying that they're looking at raising money through infrastructure bonds, which is a huge positive for their balance sheet. So hailing that and saying that's the right step, but of course, banks need to go back and see what they need to do to attract and increase deposits. But very clear takeaways: you're not going to get a rate cut until inflation remains around 4% on a sustained level. He says he's impressed with agriculture output, but more needs to be done. On exports as well, he does believe that India is on the map and that we're doing well. So, of course, he's also said that future data is important, and the future is, of course, unforeseen. So you've got to be careful when you tread the path of cutting rates or talking about inflation as well. On that note, we can, of course, most importantly, you can catch that full interview of the RBI Governor with Sanjay Pugalia at 12 p.m. to 1 p.m. exclusively on NDTV Profit. We'll take a break. We'll come back. We'll move the focus back to the market technicals. It seems like it's going to be a flat to slightly lower start on these streets, so stay tuned.
Good morning. This is India Market Open. We are taking a look at what's happened in the futures and options space yesterday and what we can decipher, perhaps try and understand how things could pan out in today's day of trade. I'll start off with the Nifty as usual. We fell and closed just shy of the 24,700 mark. We saw a little bit of unwinding in the August futures. Coming down to the Bank Nifty, that's where we closed about 50,800. It is also the weekly options expiry, so this particular index will gain a little bit more traction in today's day of trade. A 9% cut in open interest, so a lot of unwinding coming here. And coming down to the options market, well, at least as far as the Nifty is concerned, where the options expiry is tomorrow, at the moment we do have the most amount of accumulation in open interest around the 24,300 put on the lower end and 25,000 call on the higher end. And that is the range we're expecting the Nifty to move within, at least based on the options data. But as far as the Bank Nifty weekly options is concerned today, I'd reckon that 51,000 will be very important. Now, the first 1.5 hours will be important with respect to the kind of direction that the markets want to take or a lack of direction. Under those circumstances, again, 51,000 does have a significant amount of calls being written at the moment. So it's a wait and watch, and that would be the big level to keep an eye on. Moving on to stocks, it was a mixed day of trade, but we saw more longs in ICICI Prudential, Coforge and Info Edge, and among other stocks which were also in focus, we can pull up the list of those stocks which saw unwinding. Long unwinding for Birlasoft and Abbott, but Balrampur Chini, Samvardhan and Balkrishna Industries, in fact, did see about a short covering coming through. Now, let's get an expert to perhaps suggest what are the areas, what are the stocks that could potentially be in focus where there could be opportunities as far as trading is concerned. Well, we have Akshay P. Bhagwat of GM Financial who's joining us on the show. Akshay, good morning. Thank you so much for joining in. Akshay, I reckon that the first stock on your radar is BHEL. It's certainly been an interesting one. And while about a month ago it was trading near life highs, it does seem to suggest that we're starting to see some traction back in the positive zone. What are your observations here? What option structure are you deploying?
Good morning, Agam. Yes, so the first recommendation is BHEL, which is very crucially poised at a support zone of around 290 to 295. If you look at the historical data in the last 1 and a half months, there has been a tendency of the stock based on the price reading to show a bounce or a recovery from the levels of the support of 295. I'm presuming that the same trend should continue. Slight unwinding is noted of short bets around the support. And I believe this is a good point where you can build a bull call spread via the options route in BHEL, where your profits are fixed and when the risk is under control. So the strategy here is a bull call spread in BHEL, where I would recommend going long on 295 call, which is roughly trading at a premium of around 7. Simultaneously, you sell a deep OTM call of 305 strike, which is around premium of 3. Approximate, considering the lot size of BHEL, which is around 2,500 odd, I would say that keep a profit potential of 7,200 on this strategy and a loss of around 4,500 as your risk in this bull call spread.
This is, of course, the August series, and as Akshay has mentioned, maximum profit around 7,200 against a loss of 4,500. That's how this particular spread will work. But Akshay, I believe that you're expecting a sharper move in Sun Pharma.
Yes. Yes, so if you look at the price structure of Sun Pharma, in the pharma space, a lot of stocks have shown good momentum. Yesterday, there was a return of momentum in Sun Pharma. It has been in a lackluster on confined in a trading range since long. And yesterday, there was indeed a regain of momentum as it went past the levels of around 1760 odd levels. So I'm recommending vanilla buy in the option segment for the 29th August. The strike would be here 1780, slightly OTM. We closed around 1766 yesterday. So the idea is to go for buying vanilla call 1780 strike at the premium of 7 to 7.5. Your target area roughly should be 13. That's the first target. And the second target would be around 15. Keep a stop loss of 3.5. The expectation is that Sun Pharma should test 1800 plus levels in the coming week.
Just a reminder to our viewers that, sure, as we go closer to expiry, the theta component of any buy option increases. But we must also remember that any sharp moves entail also a significant jump in the price of that particular option if we in fact do see that sharp movement come in. For those who may be aware of Greeks, this is the gamma component, and gamma can lead to a considerable rise in that option premium, which is why in this case, of course, Akshay is potentially expecting that to come through in Sun Pharma, and which is why he's recommending buying that call. But Akshay, on that note, thanking you for joining us and taking us through your views on the markets, and of course giving us those handful of option structures to work around with. With that, it's back to you.
Thank you, Agam, for that. That's, of course, strategies for today. A mildly negative start is what's expected. But in the last few minutes, Japan is actually doing quite badly. It's down about 320 points. So Asian markets are lower. We are taking a cue from that and trading with a marginally flat start. 24,600 odd, 650 odd is where the street should be opening up for trade. All sectors did participate quite well yesterday. The VIX as well eased off. But as we go into trade today, what are your strategies and what should be your trades to get more perspective on that? Kush is joining in. Kush, morning. Thanks for joining in. Yesterday was a pretty fantastic run, and when we spoke at 10:30 yesterday, the Nifty was comfortably floating around 24,700. We closed just shy of that, and we wake up to a flat to slightly lower start today. Do you feel like there's a trading opportunity? Because you did indicate yesterday, and correct me if I'm wrong, that any dips closer to 24,600 should be bought into. Today could be that day when traders may get that opportunity.
Hi, Samina. First up, a very good morning. Well, 24,700 is now the new pivotal level. At least that's what the data was suggesting yesterday when we did the FNO show. That's exactly what we discussed. That there has been, a shift of call writing from 24,500, 24,900 to 24,700. Almost pleasant to see that markets for a change have been respecting the open interest levels for options. Maybe because it wasn't Nifty expiry. But then again, as I said, the pivotal level is now 24,700. If the market does sustain above 24,500, then yes, it's a positive sign. Any dips closer to that level, 24,600, 24,550 should be taken as an opportunity to create fresh long positions. But I don't think this market at the moment is in any hurry to go to that 24,950, 25,000 mark. So we might see some sort of consolidation. Bank Nifty is where the rub really lies, because 51,000 has been that line in sand that it's not been able to cross. Yesterday we did move above it, but we came down quickly. So if Bank Nifty is able to cross 51,200 perhaps on a closing basis, that's when you'll see the momentum kicking in. So a little constructive on Nifty on dips. Bank Nifty, however, if you want to create a positional fresh long, then that should only be done above the 51,000 mark.
Okay. Kush, good morning. What about stock specific action? What are you buying or selling today?
Hi, morning, Niraj. Couple of ideas, and given the texture of the market, we've got a long and a short idea. Let me start with the long one, slightly optimistic. The chemical space has actually seen, quite a bit of strength, showing resilience after what happened with Aarti Industries. A lot of these names went into a bit of a consolidation, and by that I mean maybe a couple of days. But the recovery on some of these names has been very encouraging. So I think from a near to a medium-term perspective as well, I don't think investors or traders should take their eyes off this space. The pick that I have today is Archean Chemicals, ACI. This stock has seen a very smart recovery, close to the near-term highs that it made, and we have a feeling that this might perhaps cross the near-term highs as well, given the kind of uptick that we've seen in price and volume both. The targets here are 795 and 815, 760 is a support zone, to keep your stop loss there. Now, as I said, on the short side, we've got Gujarat Gas. Now, this stock's been reeling under some pressure for the past month and a half. Around the 700 mark, it faced that resistance and has been slipping lower, ever since. No real signs of, making any kind of bottom anytime soon. So we believe that if someone wants to hedge their position and keep a short position, you could consider Gujarat Gas August future. Targets being 578 and 566. 602 is where you keep your stop loss.
A sell on a CGD. That's interesting. Remember, not quite in favor, the CGD companies in the recent past. If anything in the oil and gas space is in favor, it is probably the oil marketing companies. And I think we've got enough calls there. Yesterday, some of these stocks did very well too. So watch out for BP, HP, IOC. Maybe that's a bucket that you want to keep a keen eye out for. Okay, let's move on to some stock-specific action then. Telecom is certainly a sector in focus on the back of the TRA data, which shows that Jio and Bharti have led the subscriber additions, and Voda and BSNL has sulked. Rucha Johnson with more on this. Rucha, take it away.
Good morning, Niraj. Thank you. So as you rightly mentioned, the TRAI has come out with the June data. Now talking about the overall database, the sector has added about 1.3 million subscribers on a month-on-month basis, and this was led by Reliance Jio. Talking about Reliance Jio, it has added about 19 lakh subscribers during the month. This is followed by Bharti Airtel, which has added around 12 lakh subscribers. However, Vodafone Idea continues to lose subscribers at around 8.6 lakh is what it lost during the month. Also talking about Reliance Jio, now this is the fourth consecutive month in which Reliance Jio is leading the gain over Bharti Airtel. Now we have Jefferies who has come out with a note on this one, and it believes that Reliance Jio and Bharti Airtel will continue to gain market share until FY26. However, after FY26, Vodafone Idea will likely also come into the picture. This will be backed by the recent capital raise and the FPO, etc., which Vodafone Idea is bringing in. So FY26 will be the year for Vodafone Idea, is what Jefferies believes.
Indeed, that's the view coming in Vodafone, Idea, Jio, some of the counters that you will be tracking in early trade. Kush, do you track these telecom companies? I know you and me have talked about Vodafone extensively till a few months ago, but then of course it fell off our radar. Anything on telecos today? Maybe a self-trade?
No, not really. Even though Bharti has been consolidating, the bias here has been positive. And, it's taking support at the 50-day moving average, which it has, in the recent past and moved higher from there. So I'll be a little constructive on Bharti, although the momentum indicators don't really support, a quick trade in this one. But if someone's looking from, let's say, a 3 to 6 month perspective, then perhaps Bharti, at the current juncture, makes, a good entry point, 1410, 1450 being a good support zone. And on the upside, you're looking at 1500 plus kind of move. So Bharti, perhaps, with this consolidation is becoming slightly attractive. Vodafone, the view was same 6 months ago, remains the same consolidation, sharp up move and then a sharp giveaway on the downside. Not really as constructive, I'd give it a miss.
Okay. And watch out for Airtel too. If there is a block that happens, could it trigger some bit of short covering? Because there were some shorts piled on Airtel. So could be an interesting one to monitor. Mayuresh Joshi, Head of Research at MarketSmith India, joins us as well. Mayuresh, good morning. Thanks for joining in. It's not that this monthly telco data has really triggered moves on the telcos per se. So therefore, maybe not on the monthly data, but per se. Are you constructive here on Bharti, Vodafone, or maybe even Indus?
Morning, Niraj. So I think it is largely getting built in terms of both the expectations of subscribers, which are populating churn from Vodafone Idea for a periodicity of time now. And they are weeding out their low-end subscribers and out of the circles that they are not strong in terms of their operations. In terms of the tariff hikes per se, I think that also is largely now getting gestated in terms of expected improved performance as far as balance sheet dynamics are concerned for most of the telcos. And that should largely start reflecting in better deleveraging of the balance sheet as well. So largely getting into the price, all these news-based items that are playing out for the sector as well. But with all these developments, obviously numbers will keep on improving every passing quarter. And that should be a positive in terms of deleveraging for companies like a Bharti in particular. Jio will have strong dynamics in either case. Indus obviously becomes a beneficiary as well, because with such strong additions happening and the expectations that we are reading through in terms of more tower installations that might be required, specifically in terms of government capex, both in terms of telecom usage and industrial usage as well. It makes a case in terms of their balance sheet improvement also starting to show up in the next few quarters. You've already seen tenancy ratios becoming stable because of Vodafone Idea. And with balance sheet expected to remain strong with improved cash flows, the deleveraging on Indus' balance sheet should also be an obvious element in the next few quarters. So yeah, remain constructive on the sector. Anybody holding stocks like an Airtel or an Indus should.
That's the word coming in fundamentally on a couple of those telecom companies. Chandan, good morning. Thank you for joining us. Chandan, what is the trade on the index? Yesterday we didn't think 24,700 would get taken out. And there were a lot of buy calls that said that if there is a dip towards 24,600, one should buy it. Today could be a day when you might get that dip closer to 24,600, 650. Going long on the Nifty could be advisable.
Good morning. Thanks for having me. So Nifty completed almost 3/4 decline of the last 13 days circle. It corrected by around 1185 points from 25,078 to below 23,900, and now we are near 24,700. Earlier, the range for the index was 24,000 to 24,400, and after that breakout on Friday, the new range is shifting towards 24,400 to 25,000. So because of that, I'll go with buy on decline stance. Major support for the index will be 24,400. Intraday player even can look at the support at 24,500 and look for an upside move towards 25,000 marks. If I look at the data setup, CBOE weeks at US has corrected from 65 to 15 levels. India weeks has corrected from 23 to 13 marks. Dow has seen a decent recovery of 1,400 points and it's just 400 points away from lifetime high. And surge in the put-call ratio with decline in the volatility indicates that bulls are likely to have the upper hand. So because of all these data setup, will continue to be with buy on decline stance for the next leg of rally in the market.
That's exciting. Buy on decline, and that decline may be coming in today. And if you do get that opportunity, going long on the index is the advice coming in from Chandan. There are lots of stocks to talk about, defense stocks in particular, because they've actually gone from a bullish trend to a bearish trend over the last couple of weeks. But before that, one stock that's been on the tear and is aiming for the skies is Ola Electric. Yesterday was one day when the stock saw some profit taking, but the fact remains that it's actually doubled over the last 10 odd days. More importantly, there's news this morning that two of its products, which contribute 50% to its revenue, have actually got a PLI scheme approval. Puneet is standing by with more on that. Puneet, if there were investors looking for good news, one day of correction and wake up to the fact that 50% of its product offering, which is two products, have got a PLI approval. Great news, I'd imagine, and could be the next sort of trigger for the stock to move higher today.
Well, definitely a very, very positive news flow coming in for Ola. Now, just getting out the news first, the S1X, the two variants, 3 kilowatt and 4 kilowatt battery variants have got PLI certificates in this particular time frame. Now, this is for the mass market scooters, which are priced roughly between 84 to 90,000 rupees. Now, the company is the first one to get four of its products certified by PLI schemes and getting the benefits of the same, and that's very positive for Ola Electric. They have mentioned that they met the stringent localization norms, which is a criteria roughly 50% of the parts used in the scooters are to be localized, that they met in this particular time frame and have getting benefits of that as well. Now, they were already getting the PLI certificate for the other two scooters, which are priced above 1 lakh, which is the S1 Pro and the S1 Air. They form roughly around 60% of the volume, but now they've got 100% of the electric portfolio certified by the PLI schemes as well. That's a very big positive news coming in, but what does it mean for numbers? Let's just see. Under this particular scheme, they will be eligible to get benefits for 5 consecutive years starting FY24. Apart from that, in Q1 they had roughly 1.25 lakh deliveries of EV scooters. 40% was mass premium, mass scooters, 60% was premium. But just on the financial implications, incentives of these particular certificates range between 13 to 18% of the determined sales value. So roughly around 15%, 18% is roughly the average at the higher end that we get for scooters, priced around 90,000. For Q1 specifically, 13 to 14% of the revenues came from PLI, and that straight goes to the margins down, and that's what helped the automotive margins as well in Q1. So specifically, we had, in the conference call, Ola Electric had mentioned that this is going to be one of the things that's going to be, they will be looking out for, and it's come very earlier than expected. A big positive and a strong push for Ola Electric. We're expecting the stock should also react on this news. Back to you.
Indeed. Took a break yesterday. Today could be back on the gaining side after its recent rally that we've seen. Chandan, before we take a first break as we gear up for pre-open trade, what are your top stock recommendations this morning?
So I'll go with insurance company. We have seen good momentum in most of the name, and here I'll pick ICICI Pru Life. Technically, it has given a consolidation breakout and completing a positive price pattern, which is a pole and flag on the daily scale. The way it has given a decisive close above 740, momentum could continue. One can buy with support of 720 for an upside target was 800 zone. I'll pick one name that is the bottom out approach, buy on Apollo Tyre. The stock has negated its lower top, lower bottom after the corrective move of last 13 days. It has respected well with its key moving averages, and bullish crossover is clearly seen in mechanical indicator like MACD and RSI. So one can buy with support of 485 for an upside target towards 530. One more trading idea, that is buy on granules. Positive price setup. After the corrective or consolidative move of last 4 days, the stock is again set for an upside move. One can buy with a stop loss of 655 for target to 715 zone.
Right, those are a few buy calls coming in from Chandan Taparia. Implied Nifty is giving us a cue that the markets will start off flat. We'll take a break. We'll come back, continue talking stocks, and gear you up for trade this midweek Wednesday.
back with India Market Open right here on NDTV Profit. A minute left for the pre-open session to kick in. And, it's a day that is devoid of cues, but for a few things like the telco data that Samina was talking about, or the RBI governor comments that have come in, and something around banks, right, wherein they're talking about how there is a spread of a move of deposits to other financial instruments and not a liquidity issue as yet, but can it be corrected? Now, here's the question, Mayuresh. Are banks, by virtue of the fact that deposit costs are likely to inch up unless some of the methods like infrastructure bonds, etc., are successful, therefore, does it make banks not the first port of call? I would love to know if you are buying or investing into private banks currently, and if not, where is it that you're putting that money?
So, Niraj, I think selectively we are, and I was reading a few data points and a few articles with the entire savings ecosystem is close to 32 odd trillion. Out of that, around 10 trillion in terms of bank deposits have still come in, 2.5 trillion in terms of small savings. Almost 3.2 odd trillion have moved into mutual funds. So to that extent, the bank deposit growth has been reasonable enough. The flagging off by the governor and most analysts from the streets is based on the fact that if this continues and if the economy has to grow at 8 odd %, you will need far greater credit growth, and for that you will need a far greater amount of deposit growth than the current statistics. So that is where the issue probably lies. In terms of the resort that banks probably have, in terms of infrastructure bond, in terms of commercial paper, in terms of certificates of deposits, I think that is one accessible route that they can probably have as a temporary adjustment as deposit normalization might start taking place over the next couple of quarters. And to that extent, there will be an added cost of borrowing that comes onto their balance sheet. Do they pass that through in terms of advances? If that probably happens, there might be some element of compression of NIMs, at least in the near term, and that might reflect in terms of lesser ROEs. But the other important aspect here is that bank balance sheets across, whether it's private or public, have become extremely strong. Capital adequacy also remains extremely strong at this juncture. And therefore, I think this is one phase that the industry is probably going through, which should normalize at some point of time in the next few quarters. So our take is that we remain selectively optimistic for the sector as well. Large banks like an ICICI Bank, we continue to do that in our global portfolios. Within the mid-cap names, Karur Vysya Bank is something we continue liking, and Bank of Maharashtra.
Well, a couple of other names that are catching our attention or would potentially see movement once again this morning is at defense stocks. I mean, look at the way Mazgaon Docks, Garden Reach, Cochin Shipyard have taken to the chin. Earnings were not too disappointing. While they might not have been great for a Garden Reach, it wasn't too bad for a Cochin Shipyard or a Mazgaon Dock. The stocks which were on a one-way move from late last year, and if you've been watching us, you'd have noticed that we'd highlighted these stocks pretty much every single day as big movers. In pre-open trade, it's another down day for these stocks. I'll get a technical and a fundamental view going, but Chandan, before I get it, fundamental view on these stocks, what has changed? Is there a breakout on the downside for these stocks? They were in a clear bullish trend for nearly 6 months. Suddenly the tide has changed against them. Is there a sell opportunity on any of these stocks that I mentioned, the shipbuilding names specifically? And in the second lot, it's the BDL and the HAL that too are taking it to the chin recently, going unnoticed though for now.
Yeah, so we have seen a pause in positive momentum in most of the name, including shipping and defense. We were quite bullish earlier and stock has really done well. Even after the recent corrective move, Cochin Shipyard is up by around 200% in this year, YTD basis. But yes, it corrected by around 20, 30, 40% from the top. If I look at the Cochin Shipyard, the high was near 3,000 and now we are below 2,000. So corrective move is clearly visible. It started to form the lower top, lower bottom on the lower time frame. Even if I look at the Cochin Shipyard, it formed a bearish pattern near 2,600. And after that, the corrective move is visible. So I can't say to sell now because already we have seen a decent corrective move. But yes, some more decline could be there where again the recent corrective move can take a pause. So 1,800 or 1,750 could be the major support for Cochin Shipyard, as of now, it has been making lower top, lower bottom. So if you are holding, then for long term you can hold, but for short term, avoid. Mazgaon Dock started to form the negative price pattern. Corrective move indicates that some breakdown could be there. After 68, 70 days, it has given a break below its 50-day mark. So because of that, corrective move could be seen towards 4,000 marks. If you look at the HAL or BDL, HAL, I don't think it's a selling opportunity. Even we'll go with buy on decline if it comes near 4,400 to 4,450. But Mazda can be one counter where we are witnessing some breakdown. So yes, definitely serious profit booking is seen from higher levels. Better to avoid or go for the next price process to get some stability in these names.
Okay, well, better to avoid or wait for some price stability. So that's the view on the flip side on some of these names. What about the stocks which have done well? So Harsh joins in on the pocket, which was the best performing bucket in trade yesterday. Harsh, life insurance firms were on a tear yesterday. Coincidentally, there is an HSBC note today. What does the note have to say?
Well, HSBC continues to be very bullish on some of these names despite the kind of run-up they've seen. They've seen a significant run-up from the bottom. Some of these names, especially HDFC Life, SBI Life, from the bottom are up literally 30%. And I'm talking about 6-month bottom. So in the last 6 months or so, if you've timed the bottom, you've made almost 30+% in terms of returns on some of these counters, and more constructive is HSBC on some of these names. 17% upside even now on something like an HDFC Life from here, 800 being the target price. What they are suggesting is growth is extremely strong in the life insurance space. Of course, runway is long, and with strong growth, likely the stocks should continue to do well. Also, what they are suggesting is margin compression is definitely something that's playing on the minds of most analysts, but they believe margin compression is going to be limited, maybe 1% or so, especially in the top names, the top three being SBI Life, ICICI Pru, HDFC Life. So in these three names, at least in the private sector, they believe margin compression of around 100 bips over FY24 can be expected. Why the margin compression? One, a shift in product mix, more focus on growth will mean that they're compromising, or rather shifting their product mix more towards lower margin products. But that's a compromise which most of these life insurers are willing to make, and HSBC still looks constructively at them because they are focusing on growth. That's one. Second is with regard to expense ratios. They believe expense ratios have gone up, and as a result of that, there will be some amount of margin compression. But again, both of those factors should lead to around 100 bips or 1% of margin compression over FY24 in FY25. So still very, very constructive on some of these names.
Okay, thanks a lot for that. So life insurers has seen a big bump up in trade. Kush, if you haven't given that as a stock idea, I'm wanting to know, do you see trading upsides into any of these?
SBI and HDFC, both of these stocks have had a stellar run at least yesterday, and I think they're now close to resistance level. So I would actually wait and watch till these levels are taken out. I would go with something that Chandan mentioned, which is ICICI Pru, or if I want to add a new idea, then it is New India Assurance. If you see this stock's actually now gaining traction, and there is a lot of room on the upside, so the risk reward ratio here is quite favorable. So if I were to pick one, I would actually go with New India Assurance, with the positional targets being 295 and interim target being 275, and a stop loss for this comes very clearly at the 240 mark. The risk reward ratio is quite favorable here. The others have moved and are quite close to resistance. So New India Assurance is something that you can keep on your radar.
Niraj, I don't know whether we talked to you about those defense stocks or shipbuilder stocks specifically, but you want to tell us what you think? Suddenly brokerages are going AWOL in some of these counters, and stocks are reacting to the fact that a Mazgaon or Cochin and a Garden Reach have seen big corrections in the last few days. Have fundamentals changed overnight? What has gone wrong? Or is it just simply valuations and markets looking for other, maybe relatively cheaper opportunities in this market to invest in?
Absolutely, yes. And I think structurally nothing has changed because they are sitting on huge order books, which means that revenue visibility for not the next couple of years, but the next 7-8 years is probably existing, and more orders are expected to come their way. The margins at which these orders are also coming in are very, very decent. And therefore, as their execution continues to grow at a decent pace, the street is very, very optimistic in terms of numbers actually staying very, very stable. But there are only a couple of issues which are very issues, Samina, in terms of context. One, in terms of the existing capacities that most players have within this space, either they have to do a greenfield or a brownfield expansion to probably ensure that the order book that they are sitting on and the timelines in which these orders have to be completed need to start coming up. Unless they start coming up, the expectation of the street in the next 2 to 3 years in terms of utilization levels of their capacities and their fixed asset turns are largely getting discounted in price. It is only that much that can probably do with your fixed assets. And the other element is for some quarter or two, if there is some element of execution miss, there can be a huge element in terms of annualized numbers actually going southwards than the expected outperformance in terms of double-digit top line and bottom line growth. So I think the structural story remains. But these two factors and the expectations that price action has been a little bit too much, we're seeing that on markets with India, their late stage basis that most stocks trade at. They might actually succumb to pressure if the latter two probably happen. So I think it's a same strategy of booking some profits out of these.
Right, book your profits. Fundamentally, nothing has changed. These shipbuilders are sitting on very healthy order books and there are no concerns or slowdown in execution. Of course, we will be talking to the management of Mazagon Docks at 10:15 this morning to understand what is happening in the business and, of course, the outlook for Mazagon Docks. Well, for this morning, though, these stocks continued to see some weakness in trade. In fact, all the three names that we've talked about are seeing cuts. The cuts may not be significant, but there is enough weakness continuing in some of those stocks. Well, a couple, and Mayuresh, again, fundamentally, I didn't get a view from you very quickly on Ola Electric. There's so much of viewer interest on this one, right? What do you do? If you bought this pre-IPO, you're laughing your way to the bank. If you haven't, there could be a feeling of FOMO. Yesterday, the stock was down 9%. Near term, what's the view on Ola? Is it a buy? I know valuations are stretched. And from the medium term, 6 to 9 months time horizon, what do you do with Ola? Does it still look attractive?
No, so I rode their bike, Samina, a couple of days back, and the bike is fantastic, but I don't mind riding their bike at this juncture, not the stock.
Well, you like the bike and not the stock. The stock is an avoid coming in from Mayuresh. A couple of other names that will be moving in trade this morning are going to be banks that will be once again in focus. You've got small moves, so no major swings on either side. Stocks like Cyient, DLM will be in focus, PNB Housing Finance, Sansera, Genesis on back of an order win, a couple of counters to track in early trade. Tech is Muthoot and Manappuram, two names that may potentially stand to gain today on back of the way gold has been moving. Kush, you want to come in on Muthoot and Manappuram, both in pre-open are expected to see a small gap up.
So a pretty healthy recovery, at least on Muthoot. Manappuram hasn't really moved as much. It's still under it's still within that 20-day and a 50-day moving average band. We've not seen any kind of great volume pickup as well. So I'd give that one a miss. But as far as Muthoot is concerned, yes, it's taken support at the 20-day moving average on the dip, moving upwards now. 1900 might prove to be a resistance for opening close to that. But if it does sustain, let's say for 15 to 20 minutes above that level, then I think a short covering rally will kick in, and you could see higher levels of 1930 also. So Muthoot is the one that you want to keep on your radar. Manappuram perhaps might consolidate for some more time to come.
Well, Muthoot on the radar and Manappuram may consolidate in today's trade. Cyient, remember, is to sell stake in DLM. Chandan, do you track any of these names that have a little bit of a block that's going on? I'll bring in Zomato because you saw the block on Zomato get completed yesterday. Cyient, DLM and PNB Housing Finance. These are three companies that have seen significant or will see significant blocks take place. Zomato as well, because that's now behind us. Trajectory on the counter?
Yeah, so positive on the name. However, it has been consolidating in between range of 245 to 280 zone. But supports are shifting higher and multiple supports now shifts at 255 levels. So I believe with support of 255, it can again scale high towards 280. Overall positive view, and I think recent consolidation could take the fresh leg of rally. Talking about Scient, Scient has been making high tops, high bottom on the daily scale. It has surpassed its falling supply trend line on the weekly chart. So with support of 1940, I think one can play an upswing towards 2050. DL up, I think some positive stance. It has been consolidating, but supports are inching higher with support of 855. One can look for a rally towards 920 marks.
Okay, Chandan was talking about DLF, the real estate name, supports of 860 out there. Okay, Chairman, just stay on. Maybe we'll just take in quick opening thoughts from all of you before we let you go, because there's just about 20 seconds left for the markets to kickstart trade. Expect a quiet start and pretty much similar to what we got yesterday maybe, but let's see if we build on from there. Though the global markets are not as supportive as maybe they could have been in trade yesterday. But here come the first trades. I'm keeping a keen eye out for telcos and life insurance stocks in the session today because of what happened in trade yesterday with life insurance and telcos because of the data that has come out today. So Bharti could be right there. So flat start for the large caps. The mid cap and small cap indices should come up on your screen next, and let's see what they are up to. Again, flat for the mid cap index. The small cap index about, no big moves. Let's get the heat map up on the screen. And remember yesterday, some of the top movers were up just 3-4% even at the broader end of the spectrum. But in today's session, on the large caps at least, more red than green, a little more red than green. Shriram Finance corrects a little bit. Tech Mahindra, I think there is a downgrade from CLSA. Not a dramatic one, but about 0.6% lower. Some of the metal stocks are just pulling back a little bit after the breakneck rally that they have had. What's gaining well? Divi's Lab, 1% higher. Bharti Airtel, 0.5%. Nestle, Larsen, HDFC Life. So life insurance continues to do well. We don't quite have an SBI Life out there, but HDFC Life certainly up there in trade today. So Divi's, Bharti, HDFC Life from the gainers side. Just before I hand it over to Samina, just keep an eye out on Shriram Finance. That's the interesting one on the losing side, along with Tech Mahindra, which has gotten the downgrade.
Interesting. Nothing too much to write home about this morning. It's a flat start for D Street. But not too bad. I don't think the bulls will be complaining. We did really well yesterday, so taking a breather today is actually considered healthy, most would argue. Well, the breadth of the market is also not too bad. The bias very clearly remains on the upside, and the broader markets are doing slightly better than the benchmark by a small margin. But nevertheless, the mid-cap and the small-cap index, for now at least, are trading in positive territory. We've got a bunch of stocks to track this morning, but remember, there are no sharp, massive movers that we are picking up on just yet. I'll start with Ola Electric because there's been so much of interest on this counter in the last couple of weeks, and we've seen couple of days, and we've seen that in its stock price movement. It sold off 9% yesterday. This morning it's up again, 2.5% up move on a very quiet Wednesday morning on back of a PLI ski approval that's come in for two of their products, which contribute 50% to their top line. This is significant because, of course, the trajectory of Ola turning profitable is something that most of the street participants are betting on. A 2.5% up move on a day when all counters or most counters are trading rather muted. Genus Infra, they had bagged a big order on Mondays, had a good run in trade. This morning as well, the stock is doing fantastic. Another 3,500 crores being added to Genus Power. The stock trades the gain of 5%. Their order book now standing close to 28,000. Quest Corp was doing okay, and so was Trend just a few minutes ago, but I think those stocks have turned negative, so we'll move on from those. But Genus Power turns out to be a big mover across the Nifty 500 in early trade. A couple of blocks that are expected. So yesterday you saw Anfin selling out a pretty significant chunk from Zomato. This morning you've got Scient, which is offloading a little bit of their holding, actually a significant holding in Scient. DLM, you'd have imagined the stock would have seen a correction because they're doing it at a discount, but the stock is being very muted. There's also been a brokerage upgrade. If I can get Scient on the screen, that should be useful, and that's not PNB. So if you can get PNB Housing Finance, because that's where the block deal is. General Atlantic is looking to sell stake in PNB Housing Finance at a 5% discount to yesterday's market close. If I can get PNB Housing Finance and Scient standalone, it should be useful for us. But for now, we will give it a minute. Scient DLM trades flat. PNB Housing Finance ahead of that block is trading with a 6% up move. And Cyient itself is doing well on back of a brokerage upgrade that we've got. Well, you also have Sansera. That's another stock to watch, another QIP, another fundraise plan. The stock should be reacting to that in early minutes of trade. Apart from that, Muthoot and Manappuram, while there is no news on these counters, may be on my radar this morning, largely because of the way gold has been moving. Higher gold prices usually garners well for some of these counters. No runaway rally yet, but the stocks are very clearly trading with a clear positive bias. You also have HSBC that's put out a report on life insurers. Remember, life insurance companies have been doing really well over the last few days. SBI, HDFC and ICICI approved their aggressive buy calls with an increase in target price, but the market's ignoring that for now. Varun Beverages as well has had a buy call come in this morning from a brokerage, on back of which the stock trades 2% higher. Niraj, largely the market isn't getting up to too much activity. What surprises me is what's happening on PNB Housing Finance. I don't know what justifies a 6% up move when you've got a block happening at a 5% discount to yesterday's close. So now I think a 10% discount.
Well, I maybe the last of the selling out of the way for that stock, but yeah, good move for sure out there for PNB Housing. About 856 and counting for that one. Just very quickly, the top movers, if you will, Nuvama is losing out today, down about 4% in trade. Yesterday, some of the brokerage names were active, so keep that in mind. Just Dial has some moves. It's now 2000. No, Just Dial is 1322. Sorry, excuse me for that. Cyient is up 4.5%, yes. And some of the shipbuilding stocks, Garden Reach, Mazagon Dock, etc., are bouncing back today. So watch out for those. Actually, let me come to Chandan on that. Chandan, quick opening thoughts before we thank you. You had mentioned for some price stability. I don't think this 2-3% price move is the stability, right? You would wait for some more upticks on the shipbuilders.
Yeah, so I think there is no stability as of now. Most of these stocks have witnessed some profit booking. Mazagon Dock, if manages to move above 4,600 or 4,650, then again I'll attempt for a target towards 5,000. So only advice is just wait for any price action, then only I'll touch or I'll advise anything in this. Before, I think looking at this name, one need to focus on selective counter. One stock I can add here, apart from what I've recommended in morning, is India Mart. It has been making high top, high bottom with support of 2910. One can look for a target towards 3100 levels.
Angel One is having a field day, or continues to have a field day. It's up another 5% this morning. And interestingly, Nuvama from the same sector is seeing a cut of 5%. So both of them are on the opposite ends of the spectrum. Nuvama down 4.5%, while Angel One is trading with a gain of 4%. Stocks like Godfrey as well are seeing some profit taking that's emerging. Cyient I've pointed out, but the stock is actually doing phenomenally well. It's up 4% on back of selling that stake of about 5-6% that it has in Cyient TLM. Well, you've also got Supreme Industries, Wellspun Living. Your shipbuilders aren't doing too badly. Vijaya Diagnostics, second day running, and the stock is doing well. It's up another 2%. Varun Beverages on the brokerage upgrade is seeing a 2.5% up move. Just Dial, Mastech are some of the other counters. Kush, you want to come in very quickly on mid-cap IT? Anything that's showing up as an opportunity to trade this morning, because you've got that big meeting on Friday at Jackson Hole, and some of these counters aren't doing too bad in trade.
Well, Samina, yesterday, we did discuss, emphasis. I think, this stock, even though it's in a bit of a consolidative mode right now, down about 0.5%, I think the overall structure here is quite encouraging. 3090 being the eventual target, one could still get into this positionally. 2950 is where the stop loss comes in. Also, LTI Mindtree. This stock too has had, a positive crossover yesterday. Today also, you're seeing some consolidation, but I don't think the overall bias here is, as negative. So, a fair bit of recovery is underway. 5800, 5850 being the positional target, and the support here comes in at about 56, 2625 zone. So, emphasis, LTI, Mindtree, these are a couple of names that you want to keep on your radar. And just to add one more, and FSL, it's seen sharp moves over the last couple of days. Has seen a round of profit booking yesterday. Looks like, could be gearing up for another leg of up move. So a couple of these names, FSL, Emphasis, and LTI Mindtree to be kept on the radar.
Kush, thanks so much both of you for joining in and giving us your views. Mayuresh, before we thank you, anything on IT?
So midcap might continue outperforming, Niraj, based on the fact that the multi-million-dollar deals that large cap IT companies that probably look forward to mid-cap IT companies have their own niche areas, the $5 to $10 million deals. And most companies and the commentaries that we read through were suggesting the fact that this should continue irrespective of what probably happens in terms of the recovery process. And therefore, BFSI, retail, manufacturing, order flows remaining reasonably stable enough, margins remaining reasonably stable enough over the next few quarters is something that mid-cap IT companies can deliver in terms of earnings. Obviously, I think valuations and late-stage basis, as we see it in MSI or Market with India, is something to be probably be a little bit watchful for. But stocks like Emphasis, as an example, in our opinion, can still continue to grow.
Thanks, Mayuresh. Much appreciate taking the time out and giving us those thoughts. Really good of you. And well, that's the sum and substance of the trade this morning. But the big interview of the day or of the last 24 hours has to be the interview of the RBI governor. Speaking exclusively to NDTV's editor-in-chief Sanjay Pugalia, RBI Governor Shaktikanta Das says that the Reserve Bank is working closely with lenders to address cybersecurity concerns that are rising as technology continues to expand. Let's listen in.
इसी साइबर सिक्योरिटी और के बारे में आपने और बिग टेक ये दो थिंग्स आपने मेंशन किया. जहां तक साइबर सिक्योरिटी है, टेक्नोलॉजी जितना बढ़ता जा रहा है, अटेम्प्ट्स टू हैक इनटू सिस्टम्स, अटेम्प्ट्स टू डू साइबर फ्रॉड्स, दे आर ऑल ग्रोइंग. अभी आप 2-3 साल पहले आप रेगुलरली पेपर में आता था कि आजकल भी आ रहा है, ऐसे मैं नहीं कह रहा हूं कि पूरा बंद हो गया है, कि जो मतलब वो मोबाइल बैंकिंग में फ्रॉड हुआ है और साइबर फ्रॉड हुआ है. किसी को मतलब कोई पासवर्ड आता है, वो किसी के साथ कोई बाई मिस्टेक पासवर्ड शेयर कर देते हैं, उनके बैंक के खाता से या यूपीआई के माध्यम से पैसा चला जाता है. और बहुत सारे इलीगल एप्स भी थे. इसमें हमने बहुत अवेयरनेस क्रिएट किया. पर्सनली मैंने किया. हमने अवेयरनेस थ्रू एडवर्टाइजमेंट्स, थ्रू टेलीविजन, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया. हाल में पिछले मॉनिटरी पॉलिसी में हमने ये अनाउंस किया कि हम एक पब्लिक रिपोजिटरी फॉर डिजिटल लेंडिंग एप्स, उसका एक पब्लिक रिपोजिटरी करेंगे. कई बार ये आता है कि आपके मोबाइल, किसी के मोबाइल फोन में एक मैसेज आता है कि आपको 5 लाख का लोन सैंक्शन हो गया है, आप इसको क्लिक कर दीजिए और आपको लोन तुरंत मिल जाएगा. तो बाई मिस्टेक कुछ लोग जो है वो क्लिक कर देते हैं. 2 साल पहले बहुत सारे लोग क्लिक करते हैं, लेकिन आज के तारीख में वो बहुत कम हो गया है. लेकिन लोगों में एक अवेयरनेस क्रिएट करने के लिए, क्योंकि वो जो मैसेजेस आता है वो इतना जेन्युइन लगते हैं कि कोई कॉमन मैन है या कोई भी हो, पढ़ा लिखा हो, उसमें भी कोई फर्क नहीं है, वो दे गेट मिसलेड, दे थिंक कि हाँ ये जेन्युइन मैसेज है. तो इसीलिए लोगों को जानना ये जरूरी है कि कौन से एप्स है विच आर लीगल एंड विच आर इलीगल. तो इसीलिए हमने एक पब्लिक रिपोजिटरी क्रिएट कर रहे हैं. कोई भी कस्टमर, कोई भी मतलब वो रिपोजिटरी में जाके, वो वेबसाइट में जाके वो चेक कर लेगा कि ये जो है कौन सा बैंक का, ये किसी बैंक का ऑथराइज्ड लेंडिंग ऐप है क्या, या ये फ्रॉड है, वो पता लग जाएगा. बाकी अवेयरनेस हम क्रिएट कर रहे हैं और जितने बैंक्स और एनबीएफसीज है उनके साथ लगातार एंगेजमेंट करते रहते हैं. हमारा सुपरविजन डिपार्टमेंट में एक विंग है कॉल्ड सी साइट, जो कि बिल्कुल जिसका मेन फोकस इज आईटी क्वालिटी, IT systems and cyber security of the financial institutions, banks, NBFCs and RBI also. तो इसीलिए we are constantly working with the banks to increase the cyber security, the firewalls and other protective layers. In fact, when COVID started in the middle of March 2020, one of the first measures we took was to issue an advisory. सारे बैंकों को और NBFCs को हमने advisory दिया कि देखिए, this is the time when there will be maximum attack on your IT systems. And indeed, the number of attacks during that period went up. क्योंकि ये मतलब कॉमन सेंस है. जब आप घर में नहीं हैं या घर में आप और कुछ चीज में, शादी वादी में आप बहुत व्यस्त हैं, या किसी का तबीयत खराब है, आप उसमें व्यस्त हैं, तो जो चोरी करना चाहता है उसको एक मौका है ये. बिल्कुल, मतलब चोरी राइट वर्ड नहीं है, आई एम सॉरी, आई शुड नॉट यूज दैट वर्ड, बट जब हमारा अटेंशन बिल्कुल कोविड के ऊपर है, जो फ्रॉडस्टर्स है उनको ये पता है कि अच्छा अभी उनका लेवल ऑफ जो गार्ड है वो कम होगा, तो इसीलिए वन ऑफ द फर्स्ट स्टेप्स वी टुक in the second or third week of March 2020 was to alert all the banks. Then हम लोगों ने एक बैंक CEO के साथ एक मीटिंग तुरंत किया, उनको मतलब we alerted them कि भाई you improve your cyber security this thing, साइबर सिक्योरिटी जो अरेंजमेंट से। और ये एक ऐसा चीज है जिसमें कि बैंक्स, रिजर्व बैंक, अदर रेगुलेटर्स, गवर्नमेंट एजेंसीज, we are all working in a coordinated manner to protect the IT systems and cyber systems of India, because it can be and it is the biggest threat world over, not just for India. It is the biggest threat for financial stability. It can also be, and it is the biggest threat for national security also. So therefore, all agencies in India, whether it is the government agencies, RBI, other regulators and banks and other, we are working very closely on this.
अर्जेंट एजेंडा है ये।
Back, you're watching India Market Open, and as expected, it's a quiet morning on D Street, but I don't think anyone's complaining. Bulls and bears both working in tandem with each other as we see it. The breadth of the market is biased towards the upside. The Nifty, as expected, is sub 24,700. Well, there's one stock that's been on a dream run since its listing, and it's Azad Engineering that we're talking about. Azad Engineering is a manufacturer of aerospace components and turbines. The stock is up 138% since 28th December 2023 when the stock listed. In a couple of weeks ago, there was a little bit of a downtick on the counter, which clearly got bought into, and the street does believe that Azad Engineering remains a buy the dip strategy. Well, Vishnu Malpani, whole-time director of Azad Engineering, joins in to tell us what the company is getting up to, what lies ahead, and the outlook for the next couple of years. Vishnu, good morning. I think the last time we spoke to you, you had managed to, you were in conversation with Rolls-Royce. Correct me if I'm wrong, and there was lots of activity and action. Of course, at that stage, you couldn't, tell us or share details about the order size or the execution. I'm going to try my luck. Can we get some more clarity on what that deal with Rolls-Royce was?
Absolutely. I'd be able to share a little more information than what we shared last time. So first of all, thank you for having me on the show. We've had a great quarter. We've recently delivered, our results, and, our growth in terms of our top line and bottom line has been great. And, since you were talking about, our recent order wins, and Rolls-Royce was one of them. So that's a very strategic contract that I told you about. We've gotten Rolls-Royce onboarded for their defense platforms, and we are working towards making some very critical parts that have come to India for the first time, and we are going to be making it. So we are in the process of developing those parts. This is a long-term contract, and we are in the process of development. So we are setting up, a dedicated plant for them, and over the next 1 year, we would start, our process of development. We'll finish our process of qualification, and we should start delivering, most of these rotating critical parts by next year. And we'll start the process, and then, it's a progressive.
Vishnu, for me, that you're going to be making an investment into a dedicated plant before you actually see that impact your revenues, which could potentially be 1 year out. Is that fair? And if that is correct, then what is the investment you're making in this plant, which is specifically being tailored for Rolls-Royce parts?
So the way we work with our customers, because these are long-term contracts, it's not that you invest and then you receive, you start generating revenues. There's a very large, longish process of qualification where you have to prove to your customer that, you have the necessary technical capabilities, etc., to produce it. So we are in the developmental phase. We are dedicating. The reason why we are creating a dedicated plant is not just for this contract. We see that Rolls-Royce with us will be a very, very large, relationship over the next few years. If you look at how we've grown with GE, how we've grown with Mitsubishi and others, you would see that, Rolls-Royce would have a similar and a much larger trajectory, because the aerospace industry is very, very large, and our TAM for these parts is extremely large. Today, we are addressing $28 billion of TAM, and what we are catering to is just 1% there. So that's why we are investing ahead of the curve in that. And this is the investment that we'd also raised during IPO. So we had raised about 240 crores of primary money, and about 100 odd crores is going to get deployed in infrastructure, which also caters to the plant that we're creating for our customers, and then 200 crores to create capacity, which is going to take care of our projections for the next 2 years.
Right. And what do you plan? What is the sort of growth that you're projecting for us? Significant jump in revenues, 30% in this quarter. Profitability is also significantly jumped. And I'll talk about that because I know your finance costs have also come down significantly. Your payment cycle is also improving. So operationally, lots of good things happening. But before I go into that, what is the guidance? A 30% growth annually is an easy do for you, or is there a good chance that there could be an upshot to that number?
So we are giving a guidance of 25 to 30% because that's something that we believe that our company can do for a really long period of time. Like I just touched upon the fact that we are only, we've only touched about 1% of where we can be. We're catering to a $28 billion TAM. So 25 to 30% growth the company will sustain for a really long period of time. Obviously, our attempts internally are to go above and beyond these numbers, but then for the street guidance, we are looking at 25 to 30%. And you would be able to see it that, at a quarter level, when we are delivering a 30% revenue growth, this guidance is well under control for us. And our profit margins also, like you rightly touched upon, whether it's EBITDA margins or PAT percentages, we have maintained that. Our EBITDA is consistent in the range of 34-35%, and that's the range that we've given. 33 to 36% is the range that our EBITDA is going to be for a really long period of time, because our product mix, if it changes, then it impacts our EBITDA percentage by about 100-200 basis points, but otherwise the range is pretty consistent. And our PAT has also gone up, and like you said, our finance cost has come down, and largely last year our PAT was lower because we had abrupt finance costs because of certain instruments in the company in the form of CCDs. But since those have been taken out during IPO, today our PAT, our finance costs are normalized, and so you see a PAT which is about 17 crores for the quarter.
Got it. Vishnu, good morning. Niraj here. So
Hi, Niraj.
So this, these nodes, what you mentioned, that your addressable market is just 1%, you hope to go to 10%. So obviously the opportunity size, if you do all the right things, is very high. Let's go with an assumption that you do all the right things. Why is the growth aspect or a growth projection then a 25% number? Is it because of capacity constraints and you want to go about it slowly, or is there something else?
No, so we are guiding at 25-30%. So if you look at our 4-year journey, right, FY21 we were doing about 120 odd crores as our annual revenue. This quarter we've delivered 98 crores. So that is, whatever we were delivering in a year 4 years ago, we are delivering in a quarter. So we want to be consistent with what we are saying. We want to grow, and the reason why we are saying 25 to 30% this year largely is also because a new plant is going to get created this year. And next year onwards, we will start getting, output out of the newer plant as well. So next year, our growth projections could be slightly higher. But right now it is 25 to 30% because we want to, and we are well within, the guidance that we are giving. In fact, we have more than delivered that in the first quarter. But we are very confident of what we are guiding the street for.
Sure. Okay. So one question now, because you're doing multiple things, right? I mean, I believe this engagement with GTRE for ATGG engines, then the whole Rolls-Royce piece and some other things that you're doing. I believe you have qualifications for multiple things. So I believe there are a lot of adjacencies. What I want to understand is how does your capacity come on stream for various streams of work that you might be doing? And what does the business look like 5 years out? I mean, tell us what it is right now in terms of revenue heads or verticals. How does it look like 5 years out in terms of contribution and possibly growth projections?
So I think that's a very interesting question. So I'd start by saying, we have a 5C strategy internally. Everything that we have to do in our business is dependent on the 5Cs. And the 5Cs for us are customers, contracts, capacity, capability, and consistency. Right. So our growth strategy is based on these 5Cs, and our investments in the business, our investments in plant, machinery, or infrastructure are dependent on how each of these parameters that I spoke about are growing with us. Now, speaking about the business, we cater to the energy industry, which is the power generation industry, whether it is gas turbines, nuclear turbines, or steam-based turbines. We are qualified to produce parts for all of these critical applications, right? We are approved by EDF, that's Electricité de France, which controls major nuclear plants, in France. So we are even approved by them. In terms of aerospace and defense, that's a second focus area for us. This year, this quarter, we've delivered roughly 20% of our revenue out of aerospace. And the third business vertical for us is oil and gas. This vertical is under qualification, but we are anticipating, very, very large growth coming out of this business. So our split today is, roughly about 80% power generation or energy business, 20% aerospace and defense, and about 1% because oil and gas is in qualification. But when you look at it from FY27 onwards, we will see that the business is largely diversified. You will see 50-55% coming out of energy, whereas the balance 45% will be contributed by aerospace and defense and oil and gas, because each of our customers are growing at a much larger rate. Whatever took us, say, 16, 17 years in energy has taken us about 4 or 5 years in aerospace and about 1.5, 2 years in oil and gas. Oil and gas business has already started generating revenues. We'll be able to demonstrate multifold growth this year, and also you will see a multifold growth in the oil and gas vertical for next year as well.
Vishnu, any other significant orders that you're currently bidding for? I know you've signed significant ones with GE Vernova and Siemens Energy in the recent couple of weeks. But in terms of tenders, in terms of orders, can we expect big bang announcements? And, I know you will not be able to tell me the exact size and timeline, but give me some perspective. And of course, if that's and also what your closure rate is if you've tendered for a few big deals.
Sure. So to give you things in perspective, we were at about 1,800 to 2,000 crores of estimated order size while we were going for an IPO. Today, as we speak, our order book is anywhere between 33 to 3,400 crores. Now that's adding about 1,300 to 1,400 crores in a period of about 6 to 9 months. Now, this is where we are. If you had spoken to me at the end of the last financial year, we were at about roughly around 3,000 crores. We've added 300 crores of orders across, five customers. So, this period we've bagged about, large contracts with Baker Hughes. We've, two contracts with Baker Hughes, one very, very, strategic project with, GTRE and DRDO in India for GTRE. ATGG engine, Advanced Gas Turbo Generator engine. We've backed orders from GE Vernova. We've backed contracts with Rolls-Royce, and there's also another contract that we've backed from one large engine OEM. I won't be able to name, but yeah, we've due to confidentiality norms. But today, as a business, we have all aero engine OEMs working with us. Today, as a business, we have 80% of the energy top customers working with us, and 35-40% of the oil and gas customers working with us. So we are at a landscape where we have the right set of customers, we have the right set of product profiles with them. Our margins are good, and capacity is incoming. So I think the best years for Azad are yet to be seen, and we will continue to grow at the guidance that we've given.
No, that's not a question at all. I mean, I'm sure the best years are ahead. The question was only the pace, by virtue of the fact that the street really bakes in.
Next year, once the new plant comes in, you would see that our growth rate would slightly increase, because our only constraint today is capacity.
Sure. Vishnu, lovely talking, as usual, by the way. Thank you so much for taking the time out. Look forward to talk to you post your Q2 numbers then.
Thank you. Yeah, looking forward to it as well.
Yeah, that's Azad Engineering, and remarkable growth in Q1. Let's see how the pace continues. The management confident of better growth as new capacities come on stream. We have to slip into a quick break, but on the other side of the break, Prateek Parekh from Nuvama Institutional Equities for a short conversation around what stood out for them at the end of Q1.
Welcome back. You're watching India Market Open. It's a quiet morning, taking a break midweek. That's probably the best way to describe what the Nifty is getting up to, but inching closer to 2700. So that's actually what some bulls may be taking heart from. Who's to tell? This market does have a mind of its own. It wouldn't surprise us if it actually pick up some activity and momentum shortly. But for now, it's not doing too badly. 9 points off on the index, closer to 24,700. Well, the earnings season is behind us, and most would argue that it's been a good quarter for India Inc. Prateek Parekh, Director Equity Strategist at Nuvama Institutional Equities, joins in with what he made of India Inc. in this quarter. Morning, Prateek. Thanks for joining in. Prateek, for start with what your expectations were from the first quarter of this financial year, and how well has India Inc. fared?
Yeah, thanks, Samina, for having me over. It's always a pleasure being on the show. I think if you look at Q1, right, Q1 is quite different from what we had in FY24. FY24 was a very unique year, which was plagued with large amount of divergences and heterogeneities. For example, in FY24, we had BSE 500 top line growth growing by 8%, but profit growth grew by 20%. You had within top line as well large divergence between consumption and capex oriented names or cyclicals. Like FMCG companies saw low single digit growth, top line growth, whereas cyclicals like autos and industrials saw very high teens growth. I think those divergences are now reconciling. In Q1, we have seen a lot more homogeneity in variables. This is a quarter where top line and profit growth have reconciled. Top line growth remains stuck at 8%. Profit growth, which was in very high teens or 20% for last year, has slowed down to 10%. And going ahead as well, we expect this reconciliation to continue. Further, within top line as well, you have had reconciliation between cyclical top line as well as that of defensives. So in some sense, if I have to summarize the quarter one in one way, it is reconciliation of divergences that we had in FY24. And going ahead, top line will be the key monitorable variable that will dictate the earnings outlook per se, Samita.
Right. Pratik, that of course was on a larger sort of, the universe in terms of what you made of the earnings. And from what I take away, you seem to be fairly impressed. Profits have outpaced your growth, has far outpaced revenue growth. Now, while profit has grown significantly for a lot of companies, it's coming on back of or on the heels of operational efficiency. If revenue growth is not keeping pace, are you concerned? Do you feel like the profit uptick, while looks good, may not be organic and may not be sustainable then for the rest of the financial year?
Yeah, that's absolutely right, Samita. In fact, entire post-COVID earnings, if you look at it, is been a function of margins or operational efficiency. Further, within margins, you've had big tailwinds coming from banking sector credit costs, which were very depressed, which have gone down to very low levels. From here on, I think those tailwinds are behind us. Input prices are largely stable on a YOY basis. Banking sector credit costs, have seemed to have bottomed out, and whatever the commentary is, seems like there's going to be marginal upside risk rather than downside risk. And finally, operational efficiencies on working capital improvement, and a lot of that has been extracted. From here on, I think for whatever profit growth will be dependent on demand, and there, unfortunately, the outlook is not seeming to be very great. Despite deflation going away, top line is not moving higher. Top line growth remains stuck in single digits for the fifth straight quarter, and this is not good news. And that is where I think for FY25, there are more downside risks to earnings than upside, because consensus is still forecasting mid-teens earnings growth. And if top line growth remains in single digits, it's difficult to see, how that earnings number can be delivered. So to that extent, yes, FY25 will be a bit more challenging year in terms of earnings, because your operational efficiencies have been extracted and demand continues to remain subpar versus Samita.
So, Pratik, good morning, Niraj here. Your overweight on private banks, is it a factor of any green shoots or good signals that you saw in quarter one? Or is it based on a hypothesis that credit growth at some point of time will pick up because of capex or otherwise?
Yeah, that's a good question, Niraj. See, I think what has happened last year has been very unique. Last year, if you look at it, generally private banks tend to outperform when there's a cyclical meltdown. Last year is probably the only year in last 20 years where you had cyclicals like industrials, autos, even metals, significantly outperforming and rising, but private banks actually underperforming. And our view has been that, margin pressures have been quite high. Going ahead, our overweight on private banks is a function of three variables. First, we think that margins are likely to bottom out, while credit growth will slow, but I think margins could most likely bottom out. Second, we expect earnings growth of broader market to moderate. So the earnings differential between private banks and rest of them is going to narrow meaningfully, and that process has already begun. And third, in the entire market, this is the only space where we find valuations quite reasonable on an absolute basis. So, keeping these three factors in mind is why we are overweight private banks, despite our cautious view on the demand and on the overall earnings per se, Niraj.
Okay, so that's fair. Now, I just want to understand what surprised you, Pratik, this quarter. I mean, it could be on the downside, it could be on the upside, but maybe it's a pocket. Maybe there are specific stocks. I'm not asking for recommendations. But where did earnings really surprise you? Or maybe commentary really surprise you?
So I think earnings were on the downside. The surprise has been, on the cyclicals part. Now, some of it is associated with elections and heat waves, but I think in general, some of the high-end consumption that is slowing down, I think that's a negative surprise if you ask me in this quarter. For example, luxury hotel space or the industrial space or even the autos SUV space where growth is clearly tapering down, I think that's a negative surprise. The view was that this momentum should contain and hopefully rest of them should improve. On the positive front, on the commentary, where we think there is scope of improvement is on two aspects. One is, I think, the durables consumption. That, I think, seems to be coming back after a big pain for quite some time, and that has been a very big positive surprise in this quarter. And second is, I think, on the lower end consumption as well. The FMCG or even the IT part of it, which has been a big pain point until now, I think their signs of stability are clearly visible. And that, I think, is also a positive surprise of sorts per se, Niraj. So I think overall, my main point is FY24's, the leaders or stars, I think their negative surprises have begun. And FY24's laggards, which is like say FMCG and IT, there I think at the margin, signs of bottoming out are visible. And if anything, there are more positive surprises than negative surprises per se, Niraj.
Very lastly, two sectors. One is IT. We did talk to a few managements, and I'm sure you talked to even more, where there was an indication that they are seeing green shoots. Now, you also have the much anticipated US elections, which usually brings with it, post the event, of course, some sort of clarity in terms of orders for the IT sector. What is the outlook, and what do you make of the earnings, and what do you anticipate for the sector going ahead? And talking about green shoots, the other one is rural consumption, which we've seen a bit of an uptick in terms of reporting this quarter. Taking a cue from what we've seen and the commentary of management, how would you approach both these sectors in terms of earnings expectations for Q2?
Yeah. So I think for IT clearly, I feel last year was a very painful year. In fact, the dollar revenue growth or CC growth that we've seen in IT in FY24 is probably one of the lowest on record. It almost feels like recession was felt by these companies. Our view on IT is that the earnings downgrade cycle is largely behind us. Now, the improvement and the reason for that is twofold. One, on the demand part, we clearly feel that the IT demand has bottomed out. How much it will improve and the pace and the quantum of improvement, I think that remains uncertain. But where we still believe that the earnings downward cycle has ended, I think is on the margins part. I mean, these companies are having very low attritions and they're able to protect margins even at very low top line growth. That's a clear sign that companies have already moved ahead of the downturn, and as and when recovery comes in, there will be operating leverage. But from a broader perspective, earnings expectations are not running very high in the space. Obviously, the recovery is not going to be linear and there are still uncertainties on the anvil. But I think on a relative basis, I think IT clearly is one of the spaces where we feel the earnings downside risk is much more limited going ahead. Second, I think is on the FMCG and the rural recovery. Yes, that is again a spot where we expect things to improve, and our expectations premise on two factors. One is statistical base effects have been very low, so to that extent, clearly things should bottom out. And second is seems to be clearly a shift in spending pattern of the government. If you look at not only the central government, but many state governments have given cash transfers of sorts. Like Maharashtra has announced a big cash transfer. Similarly, we expect state governments, to focus a lot more on transfers rather than necessarily capex. And this in turn should probably help support consumption at the lower end per se, Samita. So I think from both these factors, we feel for FMCG as well, the worst is behind. Recovery is there, but again, pace and the quantum is not yet very certain. But nonetheless, directionally, it is headed for the better days going ahead, Samita.
Thank you, Prateek. It's good to get some perspective on how Q1 has been and what the outlook for Q2 is, backed by commentary management, IT and rural consumption, both bottoming out, FMCG and IT. While the quantum of improvement is tough to call, it does seem like any downside biases to earnings is for now, at least behind those two sectors. Better than expected monsoon could be the other factor that could support rural consumption. With that, we leave the markets consolidating very tightly, trading flat as we see it. Won't be surprised if we do a up move anytime now. But with that, we wrap up this edition of India Market Open. Thanks for watching. A lot more programming on the other side, so keep it with the channel.
Thanks for tuning in to Talking Point. I'm your host, Niraj Shah. Joining me today on the show is Vinod Karki, Senior VP Equity Research at ICICI Securities. Vinod, always great having you. Thanks so much for taking the time out and being with us. Vinod, before I get to the crux of what you've written on the note, it's a question that's been coming to my mind every single time people talk about dips in the markets. I would love to understand how you think about it, that whether this particular cycle since post-COVID is materially different than what's always happened in the past, in that there was a large dominance of global flows, which when turned, moved out, were not sticky, and therefore brought the markets down quite a lot. In this case, FI ownership in Indian markets are probably at the lowest that they have been in some time. And the domestic flows of 9,000-10,000 crores of net flows into SIPs make it a very sticky flow that comes into the markets every single time. So is this time really different?
Hi, Niraj. So I think, I see markets, if you see historically, they have, they're never quite different. I mean, it's more or less the same story, but in a different package. So the clearest comparison can be made from an economic perspective, where the demand is panning out in the economy. We had a similar patch between 2003 and 8, where you name the companies, they were similar in the sense, the capital goods, real estate, utilities, infra. Banks so far haven't been participating, which makes them value in this cycle. But eventually there is no investment cycle, so as to say, if banks don't fund this investment cycle. So the point is, while the market has already, kind of made up its mind that there's an investment boom coming, that's why all these sectors are rising. but somehow the assumption is that there will be no releveraging cycle, which from a macro perspective cannot happen. You cannot have an full-blown investment cycle without the releveraging cycle. So that's the thing. In terms of from an economic perspective, we have seen a similar story play out between 2003-8, where the balance sheet driven companies were really outperforming. Now, coming to the flows perspective, see what happens is post COVID, you saw interest rates go to zero and negative in certain countries, which really flared up the valuations. Since then, we have seen a mega interest rate up cycle in the US, which I think is the key driver for these outflows and the fluctuation in the outflows. I think that cycle is more or less ending. So from that perspective, given that India macro story remains intact, and this pressure which was coming up on equity valuations because interest rates were rising very swiftly, that will ease. But having said that, the domestic flows have been so strong that it did not give an opportunity for the market to become cheaper, significantly cheaper, even while this volatility in FPI flows was seen. So that's why I think you might get into some kind of situation where the market has run ahead of what the fundamentals suggest. So the market cap to GDP is almost approaching 150%.
Vinod, sorry, which I agree. But the point being, these arguments about steep valuations have been there since 21,500 levels, right? We are circa 25,000 currently. That's precisely my question. Are flows really driving the markets higher, or making sure that the markets don't see a significant dip? I was looking at your note, for example, right? And while we talk about how mid caps and small caps are filled with froth, and yes, a lot of those pockets are, but when I look at your own data, if you look at MFs and FPIs, which are the largest contributors, presumably, of flows, while MFs have put in money into mid caps and small caps, where FPIs have pulled out the money is largely from large caps. Mid caps and small caps haven't seen that. So therefore, are flows determining the market mood higher?
Yes. So that's what I'm saying, that there is, despite this huge volatility in interest rates and we saw volatility in outflows from FPIs, but on balance, the market has not corrected to the extent it should have, given such fluctuations in interest rates as well as FPI flows in between we have seen. That's because whatever selling came from FPIs was more than soaked up by the domestic investors. And now FPIs, because they don't see much issues, have started jumping in. And what is happening with FPIs is a classic case of trying to undo some of their portfolio orientation, which is resulting in underperformance. So you have to remember that FPIs traditionally have been buyers of the high quality companies in India, which we have seen that are underperforming. So if you look at their sectoral flows also, YTD, one thing is remarkable, that the largest outflow is coming only out of two banks, private sector banks, which we know are high quality assets, basically. And within banks, they have actually bought into the lesser quality PSU banks, have seen inflows during this year. And some other private banks which are not that high quality also, So, and what are the next sectors which have sold? They have sold consumer staples, IT, and energy. And what have they bought during for the first half of this year? They have been buying all the high beta stocks, basically. So be it real estate, PSU banks, and capital intensive sectors like telecom, utilities, those kind of things. So it doesn't give me a sense that FPIs are negative overall from a domestic economy perspective. They are buying smaller size companies, selling the darlings, which they used to have, the large cap quality companies, which they have been accumulating over several years and so they're more kind of recalibrating their portfolios towards riskier assets because they are outperforming currently.
Okay. Point well noted. The other interesting thing was just to see how mutual funds have bought so much of money into private banks, and yet that's the bucket that hasn't quite done well, and because of the factor that Vinod mentioned, which is that FPIs have been large sellers and predominantly amongst the two large banks. Now, Vinod, therefore the question that I have is, to your mind, what is the likely near-term trajectory, considering that flows may turn a little on the global side, on the passive side, if the Fed rate cuts were to come in, and by virtue of the fact that India's weightage in the EM basket is now a lot more than what it was, right? So therefore, do you sense that happening? I remember we were talking about the Fed rate cut led movements a year ago. It finally seems like it's around the corner.
So I think if there is a 25-50 bips cut, I don't think that's a surprise because the bond yields are already below 4%. So the bond market is already signaled more than that. So if it is limited to 25-50 bips, it will be actually not a surprise at all. But the point is, if US avoids a recession and the interest rate the interest rate rise that we are seeing starts to moderate, and I don't see a massive cut in interest rates if the US economy continues to be robust. So the latest ISM data about services and jobs for July were quite robust. So and you have to remember that US is at the forefront of the AI renaissance, the investments in energy, and also you can't write off that country in terms of productivity gains. They are at the forefront of what's going to drive global productivity and the investments there within that. So a lot of value will be created, I think, in that economy. And the latest data doesn't suggest that even for the short term, we are seeing some kind of I think the US recession calls are, at this point at least, speculative in my view. You may end up with a scenario where there is no recession, but a slowdown in growth while the interest rate environment moderates, which I think will be a reasonably good environment for equities. But the valuations, even in the US is the only country which is more expensive than India. I think valuations don't have any scope for further expansion. So I think there will be, a phase of where the stock prices don't go much, but they will go on the positive side, but not high returns. But nevertheless, some kind of positive returns. That's how I see currently the Indian and US markets.
Okay. Vinod, I wanted to talk about consumer durables, industrials, because where FPIs and MFs all have invested, but we have a management of Mazgon Dock ready to talk to. So I just want to, if I can, before we wrap up, can I just ask you for a very quick view on some of these shipbuilding / defense names, because they've seen tremendous book-to-bill ratios. Some concerns in the last couple of days when the stocks have come off. How do you as a strategist look at some of these names wherein they might be priced to perfection near term, but the order books are very, very healthy? How do you see them?
So I go by this simple principle. You may be buying a great business with great potential, but if everything or more than what warrants is getting in the price, I don't think they are great investments. So you have to look if something is at, let's say, growing at, let's say it can grow significantly at a rate of around 15-20% over a long period of time. But if the valuations are like 100p and all, so I think that's the key. So the order book and the growth may still be there, but if the valuations are something which is out of the realm of reality, I think then you have to go slow on those stocks without naming the stocks.
Yeah, agree. I don't want you to name stocks, of course. Just wanted your view on how do you think about it. Okay, great. We'll try and talk about the business with Mazagon Dock. But Vinod Karki, take a moment to thank you. By the way, really good note, Vinod. And maybe the next time that we talk, I'll borrow some of the things that you've written in this note because I think it'll be relevant. So maybe have you a lot earlier than what we usually keep the gap between two interviews, if you have the time, that is. But thank you so much for the time today.
Thanks, Niraj. Thank you.
We need to slip into a very quick break. But Mazagon Dock, a stock of the last 24 to 48 hours in a sector which has been at the talk of town for the last 24 hours. Joins in on the other side. Stay tuned. Thanks so much for tuning in to this conversation on Talking Point. It is a set of businesses which are in focus and which are a part of the defense sector and which are the shipbuilders, if you will, the shipbuilding sector. Because while a couple of weeks ago, a couple of brokerages came out and downgraded some of the defense names, saying that the only concern is rich valuations because the book-to-bill ratios and the execution seems flawless for now. The question was around valuations. Then, subsequently, a couple of other notes have come and said that what about post-2027? Can the margins which they are enjoying right now come off? Can viewers or investors realistically take a call on what business could look like post-2027? ICICI Securities wrote that note, which we highlighted, wherein they had this very steep lower price on Mazagon Dock. Now, therefore, we thought it best to get in the management and try and understand how does the management think about the business. So, Mr. Sanjeev Singhal, Chairman and Managing Director of Mazagon Dock Shipbuilders, joins us to talk about how the landscape may be like. And with me is my colleague Sajit, of course, joining in. And Mr. Singhal, thank you so much for joining in. I know we spoke about 4 or 5 days back, but it's great to have you back because just to try and clarify the air around some of the concerns. Now, one of the notes, Mr. Singhal, suggests that the margins of Mazagon Dock in particular have improved in recent times, led by ahead of delivery ahead of time delivery of vessels, lower cost incurred, so on and so forth. All of that may not remain a constant, and therefore at some point of time, these very high operational metrics may not sustain. What would you say to that, sir?
I would rather discuss the fundamentals of the company. As far as the company is concerned, you are well aware that we have been into this business for 250 years. We are a debt-free company. There are no loans, no advances, and no liabilities which are of any significant nature. As far as the company's outlook is concerned, we are very bullish with respect to the growth of the company. We have recently acquired additional 15 acres of land adjacent to the existing location of Mazgon Dock Shipbuilders. And we are also into developing this land parcel as well as 37 acres of land which is at Nava, approximately 10 nautical miles from our existing location. And intend to spend approximately 4,000 to 5,000 crores over next 4 to 5 years. So this is just a framework which I wanted to give, considering the business outlook which is internal to the company, which I am sharing, that we believe that the company is poised to grow many-fold over next couple of years. Now, coming to your query with respect to the future orders and the margins, yes, margins, we would not be able to commit with respect to anything that what margins are sustainable. It's a business which evolves and each project is a different project. But yes, what I can say with respect to costs, saving on cost is a continuous endeavor. We have been working on it, and if you look at our wages ratio, the employee dole-out, that has been consistently coming down in terms of percentage. There are no plans for any kind of a significant hiring. Yes, some small hirings may be there based on the technical requirements. So we don't see any significant change in the cost structure going ahead. With respect to the project 75, which we are executing currently today, the Scorpion submarine, 6 in numbers, we have delivered 5 submarines. The 6th submarine is also slated for delivery probably in the 3rd quarter of this financial year. And moving ahead, we are expecting order for another 3 additional Scorpion submarines, for which we have submitted all the details to the ministry, including the pricing. And 2 rounds of costing committee evaluations have already taken place. We believe that the costing committee is close to firming up their recommendations, and post this, based on certain discussions and in case any negotiations are required, we expect this order to be finalized anytime soon. Apart from P75I, which is 6 number of submarines with AIP fitted and lithium-ion batteries, where we are participating in collaboration with TKMS Germany. And here also the positive news is that as far as the field evaluation trials are concerned, the offer submitted by the combine of TKMS and Mazgon Dock Shipbuilders has been evaluated, and that evaluation is complete and successful.
Sure.
So this also is a positive development, and we expect if the things move as per the timelines, then by next year there should be positive news on this front also. Apart from the shipbuilding orders, which I have indicated earlier also, project 17 Bravo, which is a follow-on of 17 Alpha, 4 number of frigates which we are executing right now. 17 Bravo, this could be 7 numbers or 8 numbers, maybe divided on 2 shipyards. So this also is being discussed and likely to be, this would be a requirement. Recently, we have participated in next generation corvettes, which again is a corvette project for 8 number of corvettes, which will be divided over 2 shipyards. So here also we have submitted our bid. So with the due course when the bids are opened, right. So next generation corvettes are there, next generation frigates are there, next generation destroyers are there. So we see a continuous pipeline, apart from, of course, the offshore projects, which we have recently again revisited this area. So last year we got an order from ONGC for 1150 odd crores. This year we have received 4,600 crores. So this also is a separate stream of revenue which we are developing.
Mr. Singhal, sorry, I just want to come in because it's just so much to pack in an answer that it becomes difficult. So you're bagging a lot of contracts. There is no question on the book-to-bill ratio, let's say. So one of the things that is, or one of the concerns expressed is that once you start executing the new orders, while it's difficult to predict what will happen to cost, but your revenue recognition methodology, they say, is going to be likely to be milestone based, and hence margins could come off. Now, could you explain if this is indeed going to be the case?
No, revenue recognition is not milestone based. It is based on the cost to completion. What is our assessment with regard to the cost of completion and how the costs take shape? So during the initial stages of the project, it is quite possible that until the orders have been firmed up and placed, the revenue recognition or the cost to completion is calculated on a conservative basis. But this has been our experience, and considering the learning curve which MDL has already crossed, we see, and based on the past experience, so there have been substantial savings in the cost, and there are a lot of processes and methods and research and development which is regularly going on, which helps in bringing down the costs of execution. I am not committing with respect to the margins, whether they will be 20% or 27%. But yes, based on the past experience and based on the order profile, we believe that the margins also would continue to be reasonably healthy.
Mr. Singhal, Sajid here. While you're sitting on an order book of nearly 40,000 crores as we speak, you have enlisted us some of the projects where you have already bid in or you would be nominated over the next 12 to 18 months. Is it possible for you to give us a ballpark figure of kind of order book order prospective orders that will flow in the next 12 to 18 months? You spoke about 17 Bravo, which is again 7 to 8 numbers. Then there is, I think, if I'm not wrong, the acquisition AOC has already approved 8 corvettes. DAC has approved 8 corvettes, which will be divided again with between two shipyards, you and maybe possibly Cochin shipyard, which would be nominated for that. And then you have the Project 75I for additional 3 Scorpion class submarines, which is coming in. What could be the prospective book that would come in over the next 12 to 18 months if, as and when the government releases these orders?
I can say, as far as the current scenario is concerned, by and large, the orders are not on nomination basis. It is on competitive basis. So I would not be able to predict how many orders Mazagon Dock shipbuilders will be getting. But yes, what I can say, based on the orders in which Mazagon Dock shipbuilders would be interested and where we are a strong contender, we believe that during next couple of years, the order size would be approximately up to 2 lakh crores, which would be available for the shipyards in totality. So what pie actually Mazagon Dock shipbuilders is able to bag, this will depend upon what kind of bids we are submitting. We internally remain positive, very positive about it, considering our inherent strength in these particular segments.
Order which is 17 Bravo for frigates, and you said 7 to 8. What would be the size of that?
This includes 3 submarines of Scorpion. This includes 75I, 6 number of submarines. This includes 17 Bravo. This includes next generation corvettes. This includes next generation destroyers. So these are the orders which are likely to be finalized over next couple of years. And a broad value which I can look today is could be in the range of 2 lakh crores.
And that would be distributed between 2 to 3 shipyards. That's what you're saying, between you, Cochin, and maybe Garden Reach?
I am not saying between which shipyards. These are on competitive basis. Some of the orders are likely to be split between 2 shipyards. Some of the orders will go to a single shipyard, like in case of submarines, 6 number of submarines, this will go to a single shipyard. The 3 submarines, this will go to a single shipyard. With respect to next generation corvettes, with respect to follow-on of frigates, 17 Bravo, with respect to next generation destroyers, yes, there can be split between 2 shipyards.
Because if you look at the capability as we speak of shipyards, you are the most capable in terms of building of submarines. Cochin has that capability of indigenous aircraft carrier and corvettes and others, which can be split between many couple of shipyards which is there. So even if you look at it between in the next 24 to 36 months, as and when all those approvals come in and your bids are scrutinized, financial bids are scrutinized, is it fair to say that you're looking at between 80,000 to a lakh crores of additional order book coming into the books?
I would not be assigning any figures. Sorry for that.
But given the numbers, I'm talking about the 2 lakh number which you gave.
MDL is concerned. I can discuss about what is the expected value of the orders where we would be participating and where we would be focusing. Of course, we are not looking at aircraft carrier. So the orders which we are keenly focusing on, I can discuss about that. What is the expected value or the size of the orders? What MDL is able to bag, this only time will tell.
So, is it fair to also say that, that the concern that the market has that there is no visibility of orders beyond 27 or 28, it's ill-founded, because there is this order book which is coming in and which is in the process, and it will come in over the next couple of years?
You have to understand, the viewers also have to understand the basic structure of this industry. If you really look at it, as far as the shipbuilding orders are concerned, they are always lumpy and they have a long gestation period. Currently, the order book which I am executing, it comprises of 3 major orders. That is the P-75 6 number of Scorpion submarines, which was awarded in 2005. Subsequently, the 15 Bravo destroyers, 4 numbers of which we have delivered 3. Now the 4th one is slated for delivery this year. This was finalized and awarded in 2011. And the 3rd major order, that is the frigates order, this was awarded in 2015. 4 frigates for which we will be starting the delivery from this year. So this is a typical nature of this industry. These orders are large value, these are lumpy, and there is a gestation period between finalization of these orders. So today when I am talking of at least 4 to 5 large value orders, so I see this is a very, very promising scenario for this industry. If I am talking of 3 submarines under 75, I am talking of 6 submarines under 75, I am talking of next generation corvettes, 8 numbers, I am talking of 17 Bravo follow-on frigates, 8 numbers, I am talking of next generation destroyers. So I see a very, very promising scenario, and the orders getting finalized much, much earlier than what is typical for this industry.
So how do you look at the capacity? Because you said you're going to spend 4,000 to 5,000 crores over the next couple of years as you expand between Nava and Mumbai port. Once that happens, how much your capacity will go up for corvettes or destroyers and submarines?
Capacity for a shipyard is in terms of numbers also, as well as the size also, with respect to what size of vessels you are able to accommodate. Right now, we have a capacity of accommodating 11 submarines and 10 ships simultaneously. So 21 vessels we can accommodate at the existing location itself. With respect to the new locations which we are developing, we are going for a significantly larger infrastructure, which can take vessels of much larger dimensions. So this gives us a better flexibility. If you are looking in terms of capacity, maybe this would lead to a doubling of the capacity, one and a half time to 2 times of the existing capacity. And in terms of dimension of the vessels, many of the larger vessels which we are not capable of handling today, we cannot handle it right now. So this would make the yard future-proof with respect to the dimensions of the vessels. So any large vessel also we will be able to accommodate with comfort once the infrastructure is in place.
So, Mr. Singhal, okay, I'm trying to invert the conversation now. There is a large set of orders coming in. I heard you say that some of these might get finalized earlier than what was maybe anticipated by the street, and you are doubling your capacity in select spheres of work as well. Is it therefore wrong to think that post FY26 or FY27, when your revenue will see a significant uptick, let's say in the next 2 or 3 years, that there will be a precipitous drop in both revenues as well as profitability? Is it wrong to think that? Would you reckon that there will be a trending move higher or trending move ahead for revenues, executions and profits for the next few years?
See, internally, we remain positive with respect to the outlook and with respect to the future order position of MDL.
Post post FY27 as well. I mean, sorry to come in, but I'm saying everybody knows that until FY26, 27, it's all good. I think the question is only coming for post FY27.
In case we are not bullish post 27, we would not be planning for investing 4,000 to 5,000 crores.
Okay.
Then the existing yard capacity would be sufficient in case I am not reasonably bullish with respect to the future order position.
That's true. Okay, so good to get that clarity. Just one quick follow up there. Would all of this be used for domestic purposes or B2G India purposes, or would you believe that there is a large export opportunity as well for you?
Yeah, export opportunities also exist. We are trying to tap this market also. We have an export order right now for 6 number of ships to Denmark. And we definitely intend to expand this segment also. Exports will also, we are also exploring other countries. This area definitely remains open. We will, and one of the reasons for expansion is to add to the capacity so that we can cater to repair maintenance, we can cater to commercials, we can cater to exports, apart from the naval and coast guard requirements.
Give us a sense of the cash flows as well, because today your 85% of revenue comes from construction, 15% from repairs and maintenance. Will this ratio change as you go forward, because you get a higher margin on repairs and maintenance as compared to construction? So will that ratio also shift as you go beyond 2027 and as you get more repair and maintenance? And I guess the refit program is also coming in for some of the Scorpion submarines.
Yeah, this I would like to bifurcate it slightly. As far as the shipbuilding is concerned, yes, although we are eyeing at the repair and refit segment, but I primarily our focus will remain on the new build. So new build will be a primary focus, and this percentage with respect to shipbuilding is not likely to change significantly. Maybe I don't see a revenue recognition of more than 10% from the refit and repair segment. But yes, as far as the submarines are concerned, submarine is an area where repair and refits, this also is likely to contribute in a significant manner. Because we have recently delivered 5 submarines, 6 we are going to deliver, another 3 of the same series, 9 submarines. And submarines have a typical life cycle of around 30 years. And post that, after medium refit and life certification, we can add another 10 to 12 years to the life of the submarine. So during this period, there are periodic refits. Like if I take the case of 2017, we delivered the first Scorpion submarine. So the refit of the first Scorpion submarine is falling due in 2025. So this in 25, we expect that first of the Scorpion submarines would be coming to us for refit. And we have delivered from 17 to 22, 5 submarines. So practically every year, every 12 to 16 months, 18 months, the second submarine, third submarine, fourth submarine, fifth submarine sequentially would be coming to us for refits. And by the time we complete the last submarine refit, the second refit of the first submarine becomes due. So this is a sort of continuous cycle. So at any given point of time, once the cycle starts, we would be having multiple submarines with us for their refit cycle. So if you look at the submarine business, once we are building a submarine, it gives a continuous business cycle for next 40 to 50 years. So this is a very long drawn cycle. And here the value of refits and overall, etc., is a significant chunk.
Got it. Mr. Singhal, one last question from my end. I'm drawing it back to the first question, and you gave me a part answer. I just wanted some clarity there if you can. I understand you can't give commitments on margins because it's a very moving piece. But I heard you say that the margins you expect will continue to remain healthy. Now, how do I define healthy, sir? Because healthy could mean around this 20% mark that you are doing. Healthy could mean slightly higher than that. Healthy could well mean 15% as well. What is healthy? Some range, if not an exact number.
Yes, as far as the range is concerned, I can only say that for a industry of shipbuilding industry, margins, anything more than 10% is a healthy margin.
So the problem is you've been operating, let's say for example, you're operating at 15% in FY24. The expectations are that you'll go up to 21-22% in FY25 and 26. Could there be a drop back to 10% after that?
A very, very precise projection into the future that would not be appropriate and that would not be feasible at this stage, particularly when we are in the process of finalizing various orders. So depending upon their timing, depending upon their size, depending upon when we actually get and how much we actually get. So there are many variables and determinants. So giving a number at this stage, because these are not the existing orders, we can discuss with respect to the existing orders, but with respect to the orders which are yet to come, it would not be proper on my part to define these values at this stage.
Okay. Well, we wish you all the best, Mr. Singhal. Thank you so much for taking the time out and being with us on this edition of Talking Point. Really appreciate your time.
Thank you very much.
All right, that's Mazgon Docs. Well, clarified on revenues, Sajid, but just I was hoping that they would speak about whether margins could come off from 21, 22%. No clarity.
It's a little tough, right? Because it's based on percentage completion and the kind of, and as and when the order comes in. And he's saying that, Mazagon is, has a competency in submarines and destroyers. You have Cochin, which has a, competency in aircraft carriers. And between Mazagon and Cochin, you have, corvettes and frigates, which they can together make. Even though it is said that, there are other players, but the cost, they work on a negative working capital, so that's an advantage to them, because that it brings down the financial bid that they put in for any of the orders much lower compared to any competition, because the cost of capital for others are much higher. We've seen L&T talking about it, that we have put in so much of capital, but we are not able to recover the capital there. That's because the cost is very high, and for them, because they are 50-year-old companies, the cost of capital is very, and the biggest takeaway is that 4,000 to 5,000 crores, if he's putting in capex for the next 2 to 3 years and increasing the capacity, doubling the capacity, he's talking about from current 10,000 odd crores, he's looking to a revenue of 15 to 25,000 crores in the next 5 to 8 years is what they're looking at. So that is something which we need to. He's not saying it, but he's basically saying that, I'm putting that 4,000, 5,000 crores.
Why would I do the capex if I'm not bullish post FY27? Indeed. Okay, viewers, with that, it's a wrap on this edition of Talking Point. Thanks so much for tuning in.
Welcome back. You're watching the FNO show. Now, the next couple of minutes, we'll take you through all the stock ideas that our FNO guests are going to be recommending. Let's begin with how the markets are doing, though. This morning, it's a quiet Wednesday, largely in line with what we were expecting. The Nifty did closed shy of 24,700 in trade yesterday. Started off the day negative, but as you can see, it's turned into positive territory, outperforming largely most of its Asian peers. 24721 is what we have on the index, with a 22-point uptick in trade. The breadth of the market's not too bad either. The bias very clearly is on the upside, and very interestingly, it's pharma stocks that are doing well. You've got counters like Divi's Lab, that's up 4%. Adani Enterprise also looking very solid in trade, trading firm at a 52-week high. The stocks like Dr. Reddy's, Bajaj Finserv, Hindalco, ITC, and life insurance companies continue to trade firm in the session. On the sell side, you've got cement and some of your banking names that are trading soft, but again, nothing much to be concerned about just yet. On the Nifty 500, the trading is clearly on the upside. You've got big gainers. Century Textiles has sprung out of nowhere with a big up move in trade. 11% high is what we have on Century. PNB Housing Finance is that big block where General Atlantic sold stake to the tune of, I think, close to 2%. The stock responding well to that, actually. 10% high on PNB Housing Finance is what we have. Castrol is looking good. Insurance continues to be a good play. I'd highlighted Muthoot and Manappuram this morning on back of gold prices, and those stocks are building on to those morning gains, trading with an upside of 3.5% to 4% each. On the sell side, Nuvama Wealth is lower. Godfrey Phillips continues to see profit taking. ICICI Securities, Balrampur Chini, some of your gainers over the last couple of days are seeing some profit taking that's emerging. Well, we have with us Bhavin Mehta and Brijesh also joining in with their top strategies. Bhavin, I'll start with you first. What is the call on the Nifty? Started off lukewarm, but interestingly, it's built on to those gains. If anybody was hoping for a little bit of a dip to go long on the index, would not have got it. At 24,700 odd, would you consider going long on the Nifty for 25,000?
Yeah, so if you look at data points, we are looking consistently at the sectoral churn. Suddenly, we are looking at very good amount of strength on life insurance. IT, pharma continues to do really well. The only area where we are looking at weakness is particularly the bank Nifty, where good amount of weakness has been observed over last couple of days. What we are anticipating is that given the kind of sustainability that we have seen, particularly at a lower level for Nifty, high probability that we will retest that higher level, but sustainability will be something to watch out for, given that what we are also looking at is good amount of call writing at 24,800 and 25,000 kind of strike. So today I am anticipating a close on a positive side, a Nifty holding on to 24,700, but higher level beyond 25,000 is something that we will be watching out for. Sustainability will be very crucial. Supply remains at higher levels.
Okay, well, so that's the view on the Nifty. Well, Brijesh, morning to you as well. Welcome to the show. How are you trading the index at the moment, the Nifty 50 specifically?
Yeah, so morning. So my view is clear-cut positive. I believe the Nifty is poised for another 200 points kind of a rally. The positions are getting, there has been a long build-up in the Nifty futures. And if you even look at the PCI data, it is trading about one level. And slowly and steadily, I think only because of the Bank Nifty, which has got expiry today, just some pressure is there. If you ignore the Bank Nifty, then Nifty on its own has a good amount of strength. 24,900 is a strike price where the fresh longs are getting added. So I believe sooner or later, maybe not exactly today, but then during this week, we should be heading for 24,900. Precisely, I think we might go to a 25,000 and then we might settle over there. But view remains positive.
And then let's talk about the Bank Nifty. Of course, do remember there is also the weekly options expiry for this particular index. So, Bhavin, your view on an intraday basis as well as positionally, what would you do with the Bank Nifty?
Two parameters that we will be looking at for deciding the direction of Bank Nifty. We have a very strong supply zone in 20 and 50 EMA. Both are coinciding close to about 50,800, 50,900 kind of range. So that remains a technical supply. Also, the gap down that we have seen earlier, which is around 5th August, that still needs to be closed. So that gap creates a good amount of supply at higher range. So believe that this range will continue to act as a supply. On the derivatives front, from the option side, we are looking at good amount of put writing at lower strikes out of money, which is closer to 50,000, 50,200. So not anticipating Bank Nifty to move below this level. It is going to be a very tight range between level of 50,000 on downside to 51,000 on the upside at this point of time.
Brijesh, let's talk about stocks. Where are you seeing strength and what is it that you're recommending to our viewers today?
So my first pick is about the Exide industry. So I've been watching this for the pretty long time. The level of 500, it has formed a very strong base. So I believe this base is going to help for the next couple of days. And there is a closer to 550, there is a good positions which I can see to forming. So I believe Exide can be bought at the current level. The stop loss would be very small, 495 is the stop loss and target of 545. So this is the first trade. Second trade is on the escorts. Again, this is we are picking from the technical perspective. It's a reversal candidate, and I believe on an immediate basis, the bottom is done for the Exide, and we are looking for the trading bounce. So with a stop loss of 3,710, I will be taking a long trade for 39.50.
Brijesh, I believe we did miss out on taking your view on the Bank Nifty. If you could also tell us what you would do on an intraday basis and what your positioning could be on a positional one.
Okay, so see, Bank Nifty, there is a slight selling pressure. So I believe because of, as I said earlier, because of the Bank Nifty, market is not performing. Bank Nifty, I believe there will be from an intraday perspective, there will be a slip of 100, 150 points from the current level. It's already down by 280 points, so I believe another 100, 150 points will be there by the end of the day. So I have slightly negative bias. 50,600, 650 is a resistance zone, which I don't believe for the today's session it will take around. And from the directional view, whenever the Bank Nifty comes to 50,300, 50,200, it's a demand zone, and we can look for some trading bounce kind of opportunity. On a very extreme note, 51,000, there's a lot of call writers. So one has to closely watch whether Bank Nifty clears 51,000 or not. But that will take a good amount of time. But let's right now, for the day, 100, 150 points further correction on the Bank Nifty. And whenever those levels are there, then we might take some 2-3 days kind of a buy opportunity from 50,200 mark.
Well, so we also have Brajesh's view on the Nifty Bank. Well, moving on, Bhavin, your stock ideas for the day. What are you doing this on?
Yeah, so we are watching for one long and one short idea for the time. Apollo Hospital, we have seen a very good amount of consolidation. Stock is an all-time high around level of 6,875. My sense is that it is poised for taking out that particular level on a higher side, anticipating a move closer to 7,000 on upside. Very strong base around 6,600 implies that one can keep a stop loss at 6,550 and ride the up move in this particular counter. Second trade idea is on a short side, Ramco Cement. So if you look at this particular stock, we are consistently witnessing supply at higher level. Good amount of shorts have already built into the system. My sense is that probable move closer to 775 is very much likely on the cards. On the upside, one should keep a stop loss of 830 on a closing basis.
Those are a few of the strategies coming in. Cement from, of course, our analyst Bhavin does believe those are few counters, and Brijesh also has constructive calls. Thank you, gentlemen, for joining us this morning. We're slightly short of time, and we'd have loved to chat with you longer on some of those counters and some more ideas for our viewers. But very quickly, the markets are looking good from the look of it, and a couple of trading ideas have come in from Brijesh and Bhavin both. Let's shift gears and see what's happening in commodities. Gold continues to look strong, while crude underestimating the geopolitical stress. Tejas Anil of Angel One now joins in with his commodity strategies. Tejas, let's start with a call on crude. It's down 9% this quarter, declined quite sharply over the last 2 weeks as well. And most would argue that there is a ceasefire in Gaza, but there are some others who believe that crude markets are underestimating geopolitical stress. What side of the fence are you sitting on, and what's the strategy on crude? Do you think it's a good time to go long at these levels, or it still looks very, very bearish?
we probably see the price momentum are going to be catch sooner, as the prices keep falling down from the past few weeks. So somewhere we are looking forward the price will stabilize today, because there is again inventory session today held out around 8 o'clock in the evening. So somewhere 6060 it will be the buying level, and 5970 will be the stop loss you can use, and probably the target will be the 62.40, and strong support barrier is around of the 5900. So the trader could be the find out the way to pick the stock on the low level.
Tejas, tell us how you're trading precious metals like gold and silver at the moment. What's the way forward here?
Yeah, gold and silver previous, as we seen, the lifetime high was reached, and later on it's crushed down from the higher level. Right now, from the since from the 29 last month on the 29th, it's having the sudden push on from the lower level, and prices are now reaching on the higher level again, pressurized from the low barriers. So we probably see the on the higher level 70 to 110 will be the selling pressure area in the evening session. So we can put the stop loss of 70 to 300, and probably the target will be the 70,700.
All right. So that's gold. Any view on silver, Tejas?
Silver again, we see the lower level is crashing from the base metals pack is again supportive for the silver metal. Again, when we see the probability of the going for the short session as like yesterday, maybe there is a resistance when we plotting out the Fibonacci retracement on the technical base. So 85 to 50 will be the selling area opportunity for the traders. Again, they can keep the stop loss of 85 900, and probably the target for the evening session is 84 200.
And well, moving on, what about base metals, Tejas? How are you looking at trading them? Copper, zinc, what's the way forward here?
As the previous sessions, again, the base metal is the supporting part, as I mentioned just now. Again, when we see the copper area, it's having the good support at 740, and now it's a bounce back for the 800 pack. 800 is it a good support area where people could be see the maybe the selling pressure will way off, and then again we'll see the buying zone towards the 820 and other areas for the positional perspective. For the intraday perspective, we are giving the sell over here around of 806. People can go for the selling side, and keeping the stop loss of 810. We see the target around of 797.
Lastly, I believe, Tejas, you've got a call on natural gas as well. You want to share with us what the strategy there is?
Yes, as I mentioned, all the energy pack having the good support area on the lower level now after having the crush down from the higher peak levels. And now we see the 170 and 160 area is a good support area for the natural gas. So we are picking up this commodity for the buying purpose. So one can take a position for the evening session and as well as for the rest of the week. So 178 area will be the buying level, 172 it will be the stop loss, and 192 is the target.
All right. Well, there you have it. Tejas, on that note, thanking you for joining us and taking us through your views on these several commodities that we mentioned. Of course, all of them very, very actively traded. As far as the markets are concerned, holding on to those gains, Nifty has moved about the mark of 24,700. And the Bank Nifty, perhaps, that's going to be the more important one to keep an eye out on. And that continues to hover around 50,500. Well, on that note, we wrap this edition of the F&O show. But lots more lined up on the other side. We have the small and mid-cap show coming up next. Stay tuned to NDTV Profit.